Oh, yo, what's up for y'all in the YouTube replay? Hope you're having a great day. Let me start this off with a quick portfolio update because the market is starting to tank right now. If we head over here to our Robinhood account real quick, yeah, our main account, we are down 1.21%. Actually, I just called this my main account. Believe it or not, this account just took over its value. It's now higher. This one's worth 29,000 and this one's worth 28,000. So this is no longer my main account. But check this out. The SPY, something just happened to it. We're at basically a new intraday low right now. Hopefully that forms a bottom in on the day, but let me show you all the stocks we own. This is my dividend only portfolio where every stock in here pays a dividend. And every stock in here is down on the day. Even our defensive like McDonald's stock. McDonald's stock was up like 1% on the day, but now it's down. Google too. Yeah, Google's down 2.6% now. Here's our Roth IRA. Our Roth IRA is also down 0.5%, but looks like CorMedix is holding in strong. That's our healthcare little play. And we also have some Webull shares. Speaking of Webull, let me go to my Webull portfolio. This is like our risk on account. We're actually up 0.59% on the day, and we're up 20% all time, mainly from UiPath having a great recovery. We did trim a good bit of share, like 15 shares on this news. But yeah, check this out. UiPath has had a nice little rally up. Yeah, it did trim a little bit. We still got over 100 shares left, but we're narrowing our losses on UiPath. And on the dip, we actually bought another share of Futu. So I decided to buy one more share of Futu today. I also got my 10th share of Sprouts Farmers Market. I bought some Sprouts Farmers Market today. So that's kind of what I've been up to. Besides that, haven't really done much. And then, of course, we have our Moomoo portfolio, where if you look in the top left, this is called our buy and never sell portfolio, because once we buy a stock in here, we never sell it. We just diamond hand it. And these are all the stocks that we own in here. Comfort Systems just got added into the S&P 500 today, and they're only up, or they're basically flat on the day. They're up 0.03, but pretty much at an all-time high, so I can't complain. They've already had such a monstrous rally. We literally bought the stock earlier this year. We bought it this year, and we're already up 175%. So I'm not shocked to see that one have a little healthy breather there. But yeah, that's our portfolio. Murphy USA is also having a nice little recovery. Our oil and gas station play right there. So yeah. Yo, what's up, y'all? Nastram. Yeah, if you guys got any stocks you want me to look at, let me know. What do you think are good stocks to buy on the dip right now? Yo, Looney, what up, dude? Also, an interesting little stock here. Carvana. Carvana got added into the S&P 500. All-time high on this company. I kid you not. I remember this company going bankrupt, burned all the shareholders and the bondholders. This was a $3 stock, and now it's $450 to a new all-time high, and they low-key deserve it. I mean, 43 PE is high, but they just got added into the S&P 500 today, and I did not expect this. Carvana actually makes a couple $100 million of like real after-tax net income every quarter. I don't know how they pulled that off. So hats off to Carvana. I'm glad they're not bankrupt. We bought a car from them one time, and we didn't like it, so they just took it back, and they had covered all the delivery fees. I know they lost money on that, so it's good to see them doing good. Okay, Dylan said IoT stock. All right, Samsara. Actually, this one's on my watch list. This might be that like international, or let me see where the revenue comes from. Or never mind. No, I'm thinking of a different company. But 86% of the revenue comes from the US. They're constantly beating on expectations, and the expectations are just up and to the right. Check that out. Yeah, they beat on EPS, revenue, and EBITDA every single quarter. This looks great. They're narrowing their losses. They still lose net income every quarter, but notice the year-over-year comps. They lost 66% less than the previous year. They lost 50 mil. Now they only lost 16. At this narrowance, probably the same time next year, they're going to be profitable, and the top line's growing very nicely. Let's see what this company actually does. And Morningstar. Oh, there's Morningstar coverage. No, there's not. But Samsara IoT. So it combines plug-and-play sensors, wireless connectivity, and cloud hosting software. So that's probably in demand right now. I guess here's kind of their website or whatever. Anyway, interesting name there. Samsara. Looks like they haven't done too good, or they're kind of flat from 2024, but nice little recovery, little gap up. There is some big news on NVIDIA today. The administration allowed NVIDIA to now send chips back to, or send H20 chips to China. So actually, let me go to, wow, Netflix is at $95. You know what, should we cover Netflix too? The forward PE, according to them, is a 30 forward PE on Netflix. Why is Netflix falling? Because Paramount Skydance actually bid higher. So originally, Netflix announced an $82 billion acquisition. Well, it sounds like Paramount or something offered an even higher price. And now, if Netflix still wants to buy them, it's going to be less accretive to their EPS. guess. And, each time they have to bid more, it's so. Anyway, that's probably the volatility on Netflix. Maybe look to buy the dip on that one. I don't know. Maybe start to nibble, but that's really interesting. 5% dip on them. But yeah, Nvidia today, I completely got off track there. Let's see how they're doing. So they rallied up to 187. Now they're kind of going down a little bit, but that's still good news. All right, let's see here. GameStop, I know they have a lot of cash. Yeah, dang, look at this. Our portfolio, we're down 1.21%. Every stock in here is down. We got Google, Meta, United Rentals, Constellation Energy's down. So, yeah, the only thing that's not down is Nvidia. Oh, and Robinhood's green. Oh, yeah, Weeble's green on the day. Oh, Powell Industries is green. That's interesting. So here's the thing. A lot of people, this is really a meme stock, but they have diluted the life out of the shareholders so much that they now have a pretty decent net cash position. Well, and this app is telling me that there is, what is this, a bullish continuation wedge. And it says the rise probability is a 92% chance. So we don't really look at technicals, especially for like GameStop. But here's the crazy part. Well, sadly, they just issued debt for the first time. If you look at their cash on hand in the top right, they literally have $8.7 billion of cash, and but they got most of that cash from they had $5 billion of cash before today. They got to $8 billion. By look at this. Look at their debt. Literally a year ago, it was nothing. It was $12 million. Now in the most recent quarter, they have $4.2 billion of debt. So they have around a net cash position of $4 billion, and the market cap is $10 billion. So literally 40% of GameStop's market cap is their net cash on hand. They also own some like Bitcoin, I think. But you're not really buying this one for the fundamentals and how like GameStop's core business is doing. Like these year-over-year declines, just you're buying them. You're hoping Roaring Kitty tweets something again. You don't really buy and hold that one and expect to outperform the S&P 500. The other reason GameStop is doing so well is because they dilute the life out of you to raise more cash as well. Every time there's a little rally on the stock, they do the smart thing and dilute you because they know the stocks are valued and fortify their balance sheet. So check this out. Whoa, you own 41% less of the company after owning 27% less of the company. Look at that. So there used to be 306 million shares. Now there's 550. You own 41% less of the company than you did a year ago. But that's the sacrifice for their good balance sheet. Anyway, not one I'd own. Not with anything meaningful. So let's check out, Eli Lilly. Let's do that one. Yeah. So this one is really interesting. They have a huge competitor to Ozempic. It's called Zepbound, and the growth has been redonkulous. Then to the point where it's now added into Medicare and Medicaid for like, I think $150 a month, or maybe it's a little more than that. But they sell a bunch of different prescriptions. That's just like one part of their business. Check this out right here. So she used to break this down for us. Let's see if we can find that. Eli Lilly. Oh, maybe it won't. But look at the comps year over year. I mean, the sales are up 53. After grew 20. After grew 28. Like the growth on their top line is ridiculous, and not just the top line growth, but bottom line. They made 8.5 bill, or well, that's the before tax. They made 6 billion of after tax net income. They used to break it down over here, which sucks, but their Zepbound growth specifically has been really good on Eli Lilly. Player one said BITF. So Bitfarms, this is, I think, just a Bitcoin mining company. Nothing really let's see what they do. Cryptocurrency mining. So here's the thing, and I'm not just picking on Bitfarms. I've looked at every single Bitcoin mining stock out there. Marathon, Hut 8, Corzi, Hive, every single one of them. There's not a single one out there that exists that has actually outperformed Bitcoin. So it's not like this one. There's never a scenario where I'd recommend a cryptocurrency mining company over just owning actual Bitcoin. Looks like they've had some short-term momentum though, because what we're seeing right now in a lot of these Bitcoin miners is that they're converting. So basically what they have is a bunch of GPUs, and they're just using those GPUs now for cloud data center hosting. That's kind of what Iris Energy is. Still 80% of their revenue, or I think more than that, still just comes from Bitcoin mining, but they've had this huge conversion of converting it into cloud hosting deals, where now Iris Energy got like a $10 billion deal from Microsoft, where $10 billion of the Microsoft cloud goes on their servers. Yo, Lopez, what up, dude? Okay, what is Steven? Yo, if you got a stock, give me the ticker symbol and we can check it out there. What's your favorite stock you'd buy right now? I don't know. That's a good question. Today, well, these aren't probably my favorite ones, but today I did buy some Sprouts Farmers Market, and I also bought one more share of Futu, Futu. Sprouts Farmers Market's on a dip, but here's someone said ALB stock. So this is Albemarle right here. I think they do like, well, let me not, let's see what they do. So energy storage, specialties, how's that doing? Specialty revenues flat. Um, how's their energy storage? So that's actually on a decline year over year. So that might explain why if we zoom out on this stock, this stock sadly is the same price that it was in 2017. That's actually worse than Disney. So they haven't done too well, and it's starting to make sense why. If we go to the sales, the revenue, the lifeblood of the company, revenue's down 3.5 after it fell 41%. Geez. Well, let's keep zooming out here. So they've just been on a massive decline of revenue, which is unfortunate. And actually, they are getting, so they used to consistently losing that income. Now it looks like they are somewhat making profits now, which might be why they've had this nice little bounce off the bottom. And every time they report earnings, they gap up. So it might be because they're actually, if you average it out, they might be making money. They're like just break even now, which is interesting. So yeah, you try not to spam there. Hold on. Okay. Let's see here. Oh, dude, Lopez, APP. Yeah, let's check out AppLovin right here. This stock, I regret not buying. They're at an all-time high. The valuation has just been too high for me. I'd love to own this one. They're at a 51 forward PE. The current PE is an 84, so they're supposed to literally grow their EPS by like 35% just in 1 year, which is nuts. So actually, we can see the expectations. The EPS is going to go from $1.60 to $3.13, and they always beat on the expectations as well. But here's the crazy part. If we go to the revenue's up 68%. So the sales are up 68 and the net income is up by 92. So what does that mean in English? They're expanding margins. I can't believe this. They have a 60% net margin, a higher net margin than NVIDIA. So they made $835 million net income. That's after paying $200 million of taxes. Like, that's real. That's insane. At this growth rate, what's it going to be the same time next year? Same with free cash flow. Record free cash flow, $1 billion of free cash flow, up 91%. These year-over-year comps on their profitability is insane. Like, I did not expect like already like a 38, 40, 50% net margin was amazing, but to go over 60, like, I can't believe it. I love this company. They're on my watch list, but they're not even super nuts expensive though. So, hey, Callum, what up, dude? He said SoFi. Let's do SoFi. I do own them in my Webull portfolio. They're one of my favorite fintechs. But I regret, same with Robinhood. I regret every share I've ever sold to them. We have 24 shares of SoFi left. Buying it at this price isn't too attractive. They are expensive, 48 forward PE. It's not the best risk to reward buying at this price right now. I'm not buying it at this price, but I am so bullish on SoFi in the long run. And here's why SoFi definitely deserves a high multiple. I don't know about this high of a multiple, but here's why they certainly deserve a high multiple and a normally high one. Check this out. If you go to their fintech services right here, they have their own banking charter. They got their banking charter through a loophole that's now patched because of them. Check this out. Their financial services is up 76%. After grew 101, after grew 222, after grew 260. Like, it was literally $5 million revenue when they started, and now it's 420 million just this quarter. These growth rates are insane, and no analyst expected this. And we can actually see the analyst expectations down here. That's this orange line. Every quarter, they beat on revenue, they beat on EPS, and they beat on EBITDA every single quarter. So no wonder people are starting to take SoFi serious. They're making easily over 100 million net income a quarter. The sales growth is there. Next quarter, they're probably going to be at $1 billion in revenue for the first time ever. So I love SoFi, but the valuation to like load the boat now isn't great yet. But certainly one I own, and now, even if I was a shareholder, I wouldn't be selling or trimming a single share. So Standard Lithium, yeah, hey, these are just your commodity stocks, and what we're seeing right now is they own like a lithium mine. The government is taking a stake into a lot of our rare earth minerals companies because we want to be more rare earth mineral independent. But there's a lot of speculation because, no revenue here. Last time they had sales were in 2012. So they have no revenue. They're not expected to make any revenue anytime soon. What are they losing though? Actually, they're not losing much, 6 to 10 mil a quarter. They have the balance sheet to afford these losses. So it probably will just follow the momentum of like the MP Materials LAC kind of trade, but I wouldn't, they have no revenue. So I can't really give too good of a, hey, what up, Isaiah? Good to see you, man. He said, thoughts on ON, #UL. Wait, what ticker symbol is that? Or ticker symbol ON? Are you talking about On Semiconductor? Let me know if you're talking about that one. We'll check that one out. Um, let's see here. Yeah, Netflix is starting to look attractive. They're down 5% on the day after Netflix got basically outbid by Warner Bros. Or the bid for Warner Bros. Discovery. It looks like Paramount Skydance is making a higher bid. Netflix announced them to buy them for 83 billion, but now it sounds like Skydance is moving it to like 90 billion or something. And if Netflix has to bid more, that's going to be even more decreative to EPS. And so, but I still like Netflix, and honestly, or at the low 90s would be a even right now to nibble to start maybe one share at a dollar or something small, like start a very small position now and only nibble more once it falls like a good 10%. So that'll be interesting. CAPR, any tips on when to sell or hold? So yeah, these are. It sounds like this company just literally went from like zero to hero after they have this prescription, and it just had successful results. So Capricorn climb as analysts project profitability by 2028. So. $1.5 billion company. It might be a scenario where I definitely maybe well, now they're a $1.5 billion company. Before today, they were like $200 million market cap. Maybe take a little bit of profits off the table, but maybe get long some shares, just keep some shares and never sell them. See what happens. This seems like the sentiment's really in their favor. Oh, let's check it out. Unilever. Yo, this is a really cool company. I like a lot of their brands like Lipton Tea. Let's see, actually. Can we check out their family of brands? That'd be a cool little image if we could pull that up here. Okay. Unilever Global. Okay. We know so they own Dove. They're in so many different industries. Like, I don't know why they're just talking about, okay, whatever. All right, let's go to where so it's a European company, so we're actually going to convert the currency from euros to USD. And what we're seeing, a lot of food stocks and these consumer discretionary stocks, if they sell a lot of beauty products, a lot of these industries are struggling right now with the consumer. But look at this. So personal care, beauty and well-being, foods, home care, and then ice cream. Wait, Unilever might own Ben and Jerry's. I think this company might own Ben and Jerry's, and I love their ice cream. So it looks like the United States is only 20% of the revenue. Most of their revenue is 80% of the revenue is outside the U.S. But let's check out their net income right here. So that's from 2010. So they're a European company, so they report their numbers a little weird. So it looks like they missed on revenue this quarter. Yeah, these are all. They don't have its numbers loaded in right now, but it looks like, well, it says 2025 Q2 right here. Anyway, it looks like they must have had some bad earnings or something because the stock fell 6.5% today. Unfortunately, I can't dig too much more into the earnings. Let's see. Underlying sales growth. Looks like that growth rate is slowing them from underlying volume growth. Okay, well, interesting. I do like Unilever and their brands. Let me know. Yeah, Ben & Jerry's. OLP says, yeah, Ben & Jerry's. Hey, what up, man? Hey, what up, Catherine? Good to see all y'all. And Con, dude, thanks for all those gifts, or for that gift there. I appreciate that. He says bull stock. Yeah, I do own some Webull stock. They are a little expensive today. And yo, what up, Moise? Well, check out JBL. Did NVIDIA get allowed to export their H20 chips to China? They did, Marcus. That is why NVIDIA's up on the day, which is pretty interesting. So Webull is actually this brokerage app right here, this fintech app, publicly traded. So I've been using Webull for a very long time. And why I'm so bullish on Webull specifically is because they just added in these features, which they're going to make them a lot of money. They added this prediction market stuff where you can bet on weird stuff like sports and stuff, and they also added in crypto back to the app. And whenever you go buy and sell crypto, buy and sell these prediction market contracts, that's where they make a really high margin commission, because they don't make too high of a margin, like a fraction of a penny whenever you just buy and sell a stock. But whenever you go do that stuff, they make a good chunk of change. And they basically copied Robinhood's successful business model. They also have like a $3.99 a month. So that's what's interesting about them. And that's why if we head over here to our Roth IRA, we actually bought 50 shares of Webull. So that's why I'm more bullish on them than the analysts. But the analysts have this as a very expensive stock. 70 forward PE is real expensive, but they're a growth. I really like the growth on them. So that's why I would own a little bit of Webull, but I want to own like a massive amount of it. Hey, Mark, Stefan, dude, thanks for all those gifts there. I do appreciate that. Yeah, if you got a stock you want to look at, let me know. And what up, Nick? Good to see you. JBL, is that like the speaker company? Jabil. Huh. Well, they're at an all-time high. Look at that. Yo, congrats if you own this company, dude. You gotta be a happy shareholder. And this is why I also wouldn't sell this one or take a single trim of profits. The forward PE is a 26. That implies to me that this stock's probably just going to climb higher. Intelligent infrastructure, regulated industries, um, and connected living and digital commerce. It sounds very niche. And to look at that, it looks like the United States, is only 25% of the revenue, so they're internationally diversified as well. That's interesting. If we go to the net income right here, which is in USD, yeah, I mean, there were some declines from the previous year, but they're easily making 100 to 200 mil of, after-tax net income a quarter. You get a dividend here. The dividend's low, but so is the payout ratio. So there's so much future room for dividend growth. That is interesting. Maybe we can check out their website. Engineering, supply chain, and manufacturing solutions trusted by the world's most trusted brands. So this ain't that speaker company. But they're in engineering, supply chain, manufacturing, post-production. So anyway, sounds very interesting. Sounds like a business is in demand right now. Yeah, zero to hero, Ludi. That was crazy. Which defense stock would you recommend to a tech-heavy portfolio? Defensive stocks. I don't know if you mean like aerospace and defense stock, like a GE Aerospace, but yeah, if you're tech-heavy, I like AbbVie. AbbVie is a phenomenal defensive name. AbbVie, McDonald's, Waste Management, HCA Healthcare. Even in AutoZone, even in a recession, these businesses still do good. And they're kind of like, whenever stocks are down or tech is down, usually those are up. Like McDonald's. I mean, they're only down 0.06%, still down on the day, but everything else is like, they're down 0.06 when the S&P and Q are down over 0.5%. Looks like NVIDIA's given up a lot of its gains, but when the administration allowed NVIDIA to send their chips, H20 chips, back to China, but now, the news is still there, but looks like the sell-off is just going under a bit. Okay. Had to move to YouTube, still listen. Hey, thanks so much, Catherine. Let's see. Didn't you have a stock or but good to see you. Yeah, if you got a stock you may look at, let me know there. And hey, what up, Jafar? What's your favorite uranium and rare earth mineral stock? That'd be CCO, Cameco, or I think it's CCJ now. But Cameco, number one, my favorite uranium play of all time. But if I want, they're really expensive, but I like CEG as well. This is the number one nuclear play in the U.S. They literally own 30% plus of all the U.S.'s nuclear reactors. So CEG is my favorite play. Thought it was the audio. Wait, hopefully my audio's good. Okay, looks like we are. Okay. Sorry, I'm a little behind in the chat here looking at some of the stocks. But let's see. Any good stocks under $100 to buy long term? Sprouts Farmers Market, and I actually just bought that today. I actually just bought my 10th share of Sprouts Farmers Market today. We got an even 10 shares of them now, still down 35%. I think each share is, $83. Yeah, we've been doing a little bit of buying. Those are our buy orders right there. Still down 35%. But also, Calmain's an interesting one. That's your chicken egg play. Yeah, Calmain looks really cheap right now. Duolingo stock and Hershey. Yeah, let's check out Hershey. I know a lot of the food stocks are getting hurt. Hershey has been really getting hurt because the price of cocoa and chocolate has been so high, and it's really hurt their input cost and basically their margins. So yeah, their gross margins are down 21% year over year after they fell 8%. So you kind of just see that declines in margins here. Not just gross margins, but their net margins as well, which is unfortunate. But the stock is still pretty resilient. Every Halloween, people still buy, their brands. They own Reese's. They actually don't own Kit Kat. Nestle owns Kit Kat, but Hershey owns the rights to it just in the U.S. So all the U.S. Kit Kats are owned by Hershey. But sales are up 6.5%, and the net income actually fell by 38%, and that was real as well. The operating profit fell 31%. So the margins are being squeezed a little bit, but it's not the end of the world. I mean, they're still making a good amount of net income every quarter. Look at that quarter. Wow, they made $700 million. Q4 is their best quarter every year. Wow, they make a massive amount. So let's go see how much the dividend calls. So they made $278 million of net income this quarter. The free cash flow looks good too. Let's go see how much the dividend calls. So they at least need to make $270 million of net income a quarter just to afford the dividend. I don't like that the dividend payout ratio is pretty high because for the last 3 quarters, they couldn't really afford the dividend any of the past 3 quarters, and they didn't really retain any money. So the payout ratio is more closer to like 100% right now, which is a little concerning, but hopefully they'll get through this. Like the stock is actually holding up a lot better than like all the other ones. Like a Mondelez, I love Mondelez as well. They own like Toblerone, Chips Ahoy, Oreo, lots of deals with McDonald's and stuff. Actually, check out Mondelez if you're looking for stock to buy. Another food care one. Hershey's has actually done a lot better than all the other names. Okay. Can you give me some advice on not RR, not Rich Tiger Bodies? Yeah, that was junk. You don't want to buy this one. Just a momentum play. You don't buy and hold this one for the long run. There's definitely money to be made on it. This is a stock where you would you swing trade it, maybe do options or something on it. You don't just buy and hold that one for the long run. It's some revenue-less junk with no patents or IP. No, it's not a real robotics play. Like it's just a startup. The revenue's $1 million, down 20% year over year. Like the revenue's down bad. So, but there's a lot of momentum around it, and they've been fortifying their balance sheet by dilution. MSTR. Oh yeah, well, SHOO. So here's Stephen Madden. So this company, I feel like I've heard of them, but what do they do? Apparel and accessories, sale of fashion forward footwear. Oh, here's their website right here, something. So yeah, looks like some kind of. Did you guys know Amazon has a 13% market share for all the clothes and shoes sold in the US? Amazon's private label brand is phenomenal. Like they're like better than Lululemon in some cases. Like Amazon, I only know that because I was just watching a CNBC video on it, but Amazon is a huge play. But anyway, let's check out Stephen Madden right here. Wholesale footwear, direct to consumer. How's that doing? Because that's the high margin stuff. Wow, their DTC business is up 76% to $200 million for the first time ever. So that's good growth right there. They still this quarter missed on revenue, beat on EPS, but missed on EBITDA. So the sales growth is slowing a little, like 6, 0.2, but looks like, well, the margins are really getting squeezed here. So yeah, I think with the higher DTC sales, the margins would be improving. But look at the net margins year over year, down 63, down 190. Well, I'm guessing, well, it wasn't a one-time adjustment. If you go to the operating profit, it says they lost 37 million. That might be from an acquisition. So yeah, look at this. If you go to their cash investing activities, they bought a company for like 400 million there. Maybe that's why this thing went negative there. That was a one-time adjustment. But even on all the other quarters, down 61, down 20, down 5, down 2. I don't know. I don't love the apparel, like retail, like clothing. So, okay. Hey, what up, Alan? And Soyama, how's it going? ELV, yeah, let's get to ELV and then we'll get to DE. Yo, John Deere's doing pretty good. John Deere's a really interesting agricultural commodity inflation beneficiary. So here's ELV, Elephant's Health. And sorry if the stream's a little laggy. My Wi-Fi is just not great today, like it always is. But check this out. ELV is one of the stocks that have been hurt from the Medicare, Medicaid shenanigans. Let's see where the revenue comes from. So health benefits, Carelon RX. I know we use Optum RX, which is by UNH. So let's go. It looks like the EPS expectations aren't too terrible. Like the net income's supposed to fall to $2.40 next quarter, but then it's going to go back up to 10. And I wonder if they'll actually hit that $10 EPS mark. But next quarter, only $2.40. So yeah, so what we're seeing is same with UNH. This top line's growing, the sales are growing nicely. Do they report quarterly? They do. So I wonder why it wasn't showing like that. So yeah, the revenue's up 12, but the net income's up 19. I mean, that looks good. I mean, they're making billions in net income every quarter. So probably maybe a safer, better play than like a UNH. I don't know. I wish I could give more input here, but yeah, you get a 2% dividend yield here. And yo, shout out to the homie Maddie on the YouTube stream with the 25 Ron. No way, dude. He says a coffee. Yo, I need a coffee right now. I need to wake up. But yeah, I appreciate that, man. Actually, let me see if there's any news about ELV right now, just for fun. No, there's not. Okay. DE, yeah, John Deere. They were agreed on the day. Look at that. Earlier, they were up to like 480. Now they're flat on the day. Yeah, the market is kind of gone down a little bit. But yeah, John Deere, 28 forward PE. That's why John Deere, I wouldn't trim or sell out of this company. I like John Deere for the long run. This is a good buy, never sell stock. And you get a nice over 1% dividend. They have these robots that like literally farm your whole field for you, these robotic tractors with their software and stuff. It's really cool. But yeah, as there's commodity inflation, this should benefit. So yeah, they're in a lot of different industries, small agriculture and turf, production and precision agriculture. They now have like these new drones that these drones will like spray the parasiticides on your thing for you. They're just a really cool company. They make a bunch of net income every quarter. The net income has gone down on the year-over-year comps just because the whole environment right now, but that doesn't stop the stock. Stock still does great. And the PE is fair. The price of net income is fair. Okay. Um. Yeah. Uh-oh. Dang. My Ethernet just. Okay. Hey, what up, Paul? And yo, label. If you got a stock you may look at, let me know there, Maddie. But what is DBRG? What's this one right here? Digital Bridge Group. I actually have not heard of this stock before. Um, Looks like they had a massive gap up on some sort of news yesterday. Look at that. The stock went from $9 to 14. Like, I wonder, there had to have been some sort of specific news here. If anyone wants to tell me what that news is, and I'm trying to find it here. I don't think it was because they reported earnings, but as expect, Digital Bridge transaction. Digital Bridge reaches agreement to be acquired by GI Partners. Oh, okay. So we shouldn't even really look at the stock because they're being acquired. Oh, wow. Look at this. That's actually really bad news. Their sales were 3 million this quarter, when if we zoom out, to the last year, they were doing over 100 mil or 70, sometimes 100 mil plus a quarter, but now their revenue went negative. Anyway, they're being acquired. So nice. That one's interesting there. Logitech. What's their stock? I don't even know if they're a U.S. company. RON is the Romanian LEU, the official currency of Romania. Oh, hey, thanks. Trevor said Costco is a great long-term stock. Yeah, Costco is a phenomenal long-term stock. It's just too expensive, which is unfortunate. Like, what's the forward PE? 44 forward PE on Costco. That's more expensive than Nvidia, Microsoft, Amazon, Google. But this is a super, super high-quality name where they have a great business model. You have to pay for a subscription to get into the Costco stores. And whether you pay or whether you go there or not, you're still paying them the monthly thing. And whenever you go to a Costco store, you buy stuff in bulk. So you get a good deal. So consumers are happy to go there. They make good net income every quarter, easily $2 billion. If you kind of average out here at this growth rate, probably $2 billion of after-tax net income every quarter, which is good. And get a small yield to a 0.5% dividend, safe payout ratio. They raise their dividend every year, a good chunk. I love everything about Costco except its valuation. It has come off their peak. I remember when this stock was $1,000. That's crazy. Walmart's at an all-time high today. But yeah, forward PE of 45 still might be a little too expensive to pay on Costco. Yeah, look at Walmart right here. Walmart's also, what's there for 40 forward PE on Walmart? Yeah, the grocery stores do surprisingly well. Okay. SAP. Ooh, let's check out SAP right here. So SAP SE. So let's check it out here. So yeah, this is a software company, 34 forward PE, and its current PE is a 34. So their net income is expected to be completely flat. Wow. Look at next quarter. The revenue is supposed to rocket up to 9.7, 9.5. I wonder if SAP announced an acquisition or something, and that's why. I mean, that's really interesting. Just 9.7 billion. Will that be like a record? That'll be a record revenue by far. So maybe that's from an acquisition. Yeah, their EPS they beat constantly on EPS. So that forward PE of a 34, whatever, it's probably really like a 29 because of how massively they always beat on net income every quarter. And so anyway, it looks like some sort of things going there. So yeah, application technology and support revenue, core services business. So yeah, anyway, that's SAP right there. Oh, they're a European company. So actually, we were looking in euros. So I guess we can convert that to USD. But yeah, look at the net income. It's up 59%. Their net income year over year. After grew 19. They're printing money. Wow. That's a great net income growth rate. Was that like a one-time adjustment? No. They really did net 2.4 billion after paying 500 million taxes. Not too shabby. Yeah. Unfortunately, I might be getting someone's. Yeah. Yeah, let me see if I can find that Logitech stock for you. Logitech. Let me just type in the name. Oh, LOGI. Okay, we found it. LOGI stock. So they are a $17 billion company, kind of like a consumer electronics play. Like I know Logitech makes mouses and yeah, gaming stuff. Keyboards, pointing devices. I wonder what that is. Video collaboration, tablet accessories. So it looks like I actually like how diversified the revenue streams are. Webcams. So yeah, this is like your. Oh, look at the net income down here. This is really good. They're making easily 100 million to 200 million of after-tax net income a quarter, and they really do net that. So let's see here. You get a 1.33% dividend yield. It kind of reminds me of like well, not like a Best Buy, but like you buy all their stuff at like a Best Buy. Let's see, do they pay a dividend? Or actually, they're doing buybacks every quarter. Every single quarter. Sorry, the thing isn't loaded. There we go. At the very top here, they're easily doing 100 to 200 mil of share buybacks a quarter. Pretty impressive. So if we go to the net income's up by 17, but the net income per share is up by 21 because of the share buyback. 17. They bought back 5% of all the company just in the past year, on top of paying a 1.33% dividend. So that one's real interesting. Hasn't really kept up with the S&P though. What app is this? Yeah, hey, that's actually, if you want to get this app I'm on, it's where you buy stocks. My favorite app. It's in the link tree in my bio, very first link there. Affiliate link, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks. So yeah. What do you think about HTGC? HTGC. This is a BDC right here, Hercules Capital. So these BDCs, a lot of people love these stocks because by law, these companies have to pay out 90% of their taxable income in the form of a dividend. So if we go to their dividend right here, it says a 9.95% dividend, and it's actually sustainable because they're a BDC. Now, what these don't ever do is really outperform the S&P 500, but you're not buying this expecting to outperform the S&P 500. You really just want your 9% dividends a year, and then even if you lose 1% in stock price appreciation, like you're still doing 8% a year. But also these dividends are non-qualified. They're distributions, not qualified dividends. So whenever you receive these dividends, they're taxed as short-term capital gains and not long-term capital gains like your normal everyday, every other dividend stock would. So you pay a higher tax bracket on the income, but they're like a REIT. You buy it to maximize your income. Remind me of like a Main Street Capital. This is another BDC. This one pays monthly. I like Main Street Capital maybe a little more. Let's see. But they do in total returns. Hey, what up, Miguel? Yeah, Mo Ultra. Actually, here's another kind of high yielding stock right here. Check this out. Again, when you buy this for the dividend income, if you go to Ultra right here, the stock is the same price that it was in 2015. So same stock price in 2015, but what you get here is a nice little 7% dividend, and that 7% dividend is sustainable and safe. Or let's go verify that. So look, this quarter, when it says they made $1 billion, this one quarter was a one-time adjustment. They had like $1 billion fine or something, but this quarter they made $2.4 billion of net income. Let's go see how much the dividend costs. Let's go look at the exact numbers. So they made $2.4 billion of after-tax net income. Well, their dividend cost exactly at the top here, $1.7 billion. 1.72 billion. So they're making well above that. I forgot to show they're even doing a little bit of share buybacks as well. Check this out right here. They're doing over 100 million of share buybacks a quarter because they can afford the dividend. So but the growth is gone here. It's kind of like this is I can't talk about the industry, but look at this right here. The sales, the revenue's down 3% after it fell 0.3, after it fell 2.23, after it fell 3, after it fell 4.7. Like these are streaks of declining sales, but the dividend is safe. You don't really expect to outperform the S&P with that. Can you look at SAP? Oh yeah, the wrong SAP. Did I look at the wrong one? SAP. Oh wait. Securities Inc. So here we go. This one, another one that's done not too well. It's the same price that it was in 2016, but the past couple months here have been good. They've gapped up on earnings. It's a Canadian company, so we'll convert the currency to USD. Half the revenue comes from the US, so they missed on revenue, slight beat on net income, and slight beat on EBITDA. So sales are down 2.5% year over year. but the net income grew 26%. So the profits grew 26%. Maybe their gross margins grew by 7.79. Nothing's like crazy blowing me away here. You get a 2% dividend yield, though. Is a global dairy processor. Okay, it's a dairy processor. So there you go. I did not know that. It's like they sell cheese and milk and stuff like that. It's half of it to the U.S. So there you go. Maybe they're rallying up so much because the tariffs have been died off or something. I don't know exactly, but what's the FCF stands for free cash flow. What up, Joshua? Open doors. Yeah, I don't love open doors. Not too good. The market is down and my portfolio is up. Yo, that's nice, YouTube agent. I haven't looked at my portfolio. Let me do a quick portfolio update, then we'll get back to the analysis here. Check this out. Our main portfolio, our dividend-only account, we are at a new intraday low as we speak. Hit the like button on the stream for me, RIP. But yeah, we're at a new intraday low right now. Yeah, every stock in here is down on the day. So you got some good defensive holdings if your portfolio is green on the day when the market's so red. Yeah, look at that. QQQ is down 0.5% and we're down 1.3. So we're definitely doing worse than the market, but looks like our Roth IRA is almost green. We're only down 0.1, mainly from Cormedics. Wow, Cormedics is up 6%. We're now positive on our position. No way. We've been talking about Cormedics for a while, not one I'd really own with anything meaningful, but anyway. And this portfolio is only down 0.2. Our largest holding in here, Comfort Systems, got added into the S&P 500 today. But unfortunately, the stock didn't rally as much as I thought it would, but I'm not complaining. I've officially built a very strong long-term portfolio. That's like the best feeling, agent. You can just buy and diamond hand them. What I mean is HTGC and Maine can outperform the S&P if you reinvest the dividend. Yeah, or potentially. Let's see. I also BDCs, they're good to own in a Roth IRA. That way you don't have to pay the higher tax on them. Let's see here. Ooh, Ben said, well, I guess we can cover this one. This is one I would not own, or there's so much volatility and momentum around this one. It could be a really fun like swing trade or something, but this isn't one you really want to diamond hand. I've looked into this stock. I've actually owned this stock like years ago. This is I've been in your situation. This is a startup company where, of course, they've done great. So if you're a shareholder, you're probably doing very well. But the risk reward, especially after it's done so well, does not look good because this is a company that makes these underwater, it's a startup, but they are in the process of making these underwater robots that suck the mineral, the copper and the nickel and zinc all out of the water. And then they sell those rare earth minerals to other people. Well, they've never done that. They've never sold anything. They have no revenue. They're not expected to make any revenue anytime soon. And they're losing a lot of net income. Wow. They lost 300 mil, 100 mil. So, and they just leveraged up their balance sheet. Look at that. Or I guess they've always had more liabilities than assets. So it's just not, from a pure financial point of view, not one you'd really want to diamond hand. There's so much future hopium you're paying here at a $3 billion market cap. But it's interesting. If they can actually finally get like doing something, like they were supposed to have like results years ago. But anyway. Okay, let's see. Top 3 holdings is VOO, QQQM, and SMH. SMH is a cool ETF. If you're looking for it, look at that. SMH is at an all-time high today. This is your semiconductor ETF. So if you're wondering, like, I don't know, I want to get exposure to this AI stuff. I don't know if I should buy NVIDIA or AMD or Taiwan Semiconductor. Well, this ETF solves your problems. It's an ETF, so it's a basket of stocks, and this is a pure semiconductor ETF, so it breaks your money up for you into all the semiconductor plays. So like NVIDIA, Taiwan Semi, by market cap, then Broadcom, APLD, Micron, ASML, Intel, AMD. So you get exposure to all the names, and it's done like stellarly better than the S&P. So pretty cool. It's more probably disciplined approach into buying instead of one individual one. NVIDIA went up today because the government just allowed them to now send their H20 chips back to China. And I think AMD got that raised as well. So, but they kind of sold off the rally, unfortunately. Let me go check NVIDIA real quickly. Then we'll get back to the stock analysis. My bad here. Yeah, look at this. Initially, NVIDIA rallied up. Looks like it sold off some of its gains though, but no biggie. Okay, let's see here. Actually, this portfolio is surprisingly green on the day. Oh yeah, because of UiPath, we sold like 15. We trimmed a little bit of UiPath just because we've been down on this software name for almost 5 years now. We're a diamond hander over here on some of these stocks. Okay. Um, I've been tapping in every week. Hey, what up, Deku Pass? He said QXO stock. QXO, I think this is that. I can't give you any thoughts on this one because it's like an acquisition company, and they just got this like home building products company, yeah, residential roofing products, uh, bought them, and now they're publicly traded under this name. Now, wait, where are they headquartered? The United States, okay, in Connecticut. Maybe you can check out their website really quickly, please. QXO.com. Okay, maybe it won't load. Well, okay, that's okay. But if we go to, let's see, is the revenue recognized? Okay, so the revenue is here. There's no year-over-year comps because look at this. If we look at their revenue before today, 13 mil, 15 mil, no revenue. But now that they've got this company, it's 2.7 billion of revenue. That's insane. And on that 2.7 billion, looks like they lost 140 mil. They lost 50 mil last quarter when they used. So I I just need more data here to really give you some real thoughts on this one. But yeah, they just acquired some like roofing company. I'll try their website one more time here. I think it's just the website that's not working. Yeah, because I say my Wi-Fi is fine, and I think it is. Um, Carvana, what the heck? Yeah, dude, Carvana got added into the S&P 500 today. Look at this, they're at an all-time high. Same with Comfort Systems, but here's the crazy part. Here's why they deserve the hype around them. Like I did not believe this. They really are printing 2 to 300 million of after-tax net income a quarter. Like the before-tax number was 500 mil, and they netted 260. So like they really make 2 to 300 million net income a quarter, and this is impressive growth rates. Sales are up 55 after grew 32. Like they were going bankrupt down here. They had to burn all the shareholders and bondholders to raise cash, and now they're at a literal all-time high today. Congrats to you on that one. I have 1K. What three stocks should I buy that'll grow profit? First off, I would just keep the backbone of your portfolio, and just in the S&P 500 because this diversifies your money for you. Have the backbone of your portfolio in the S&P because most individual investors and in hedge funds literally cannot beat the S&P 500. So have the S&P 500, just ticker symbol VOO or SPYM, QQQM, all these. SPYM is $80 a share, but you can buy fractional shares. But you have this in the backbone of your portfolio. Stocks aren't get rich quick. It's supposed to, you want a 10% CAGR. You turn $100 into 110, but then you compound that and snowball. Then it goes from 110 to 128. Then 128, so, you kind of get the idea there. Check out now. Let's check out Service now. How many stocks do you have that are up 100%? I don't know. That's a good question. I mean, we'll check. I guess we'll check that out after this. So here's ServiceNow. A lot of these software names, like a Salesforce, Adobe, are really getting hurt by the AI thesis, and just the multiples are coming down. But yeah, dang, ServiceNow has a forward PE of an 80. That's normal for these software names. But I kind of like ServiceNow more than Salesforce. Actually, they're a subscription model company. That's 96% of the revenue. It's all reoccurring. And check out the analyst expectations. I mean, it's just up and to the right. Revenue's gonna go from 3 billion to 3.6. EPS is supposed to be a record, and they always beat on EPS / net income every quarter. Check out the net income down here. Easily 4 to 500 mil of after-tax net income a quarter. So impressive. So yeah, that net income is insane. I really like ServiceNow. They'll always trade expensive, kind of like a Palantir, just because the industry. Is VTI a good backbone? VTI, yeah, the total stock market. So yeah, this one as well. It doesn't just own the S&P 500 in the U.S. names. It also owns some of the big international names like SAP, like Shopify, like Ferrari, like Taiwan Semiconductor. These non-ASML. It owns the non-U.S. names as well. It's the total stock market. It owns a little bit of every stock, I think. Just kind of crazy. How many stocks do I own that are up 100%? Well, let me just count real quick. I got 1, 2, 3 in here. 4, 5, 6, 7. I think just 7. I have 7 stocks that are up 100%. I think Google lost the lead. Yeah, we're only up 92% on Google, but that's still amazing. Yeah, look at us today. Portfolio's down 1.3%. Let's see. BMNR, yo, that's just like a bit. That's BitMine. This basically is just an Ethereum holding company. Tom Lee is on the board and works for the company now, but I would. There's not really a scenario where I'd actually recommend this over actual Ethereum. I long term just think Ethereum will probably do better than the Ethereum holding company. It's a fun little trader kind of stock though, but not when you want a diamond hand. I don't think Wayfair, yo, that's like a interest rate sensitive kind of what's that called? Like chairs and furniture. Is that I couldn't think of that word. Furniture play. Really interest rate sensitive, tariff sensitive. Let's see. Let's go look at their numbers. Are they profitable? So no, they lose a lot of net income every quarter, but actually, whoa. They actually technically the business made net income and made profits the past 2 quarters. So they're profitable the past 2 quarters when if we zoom out, they used to burn through, yeah, it's like 100, wow, even 300 mil a quarter. But for the first time really ever, they're like profitable. They are really, really leveraged. Look at that, twice as much liabilities as assets, lots of long-term debt to pay. And it's hard to pay debt when you don't make money, but they just now started making money, which is good. So it's an interesting, like interest rate sensitive play. I wouldn't. That being said, since they're so cyclical and sensitive, I would not have this as like a meaningful size position. The stock is the same price that it was in 2017. So, but that rally, like the rally's kind of already happened. Going from 20 to $100. But congrats if you own that one before today. Um, Well, what about world ETF minus the US for the overbloated Mag 7? Well, that's the thing. None of the Mag 7 are overvalued, in my opinion, except Tesla and maybe Apple. Tesla is bonkers expensive, but everything else, Meta 24, or these are forward PEs, Google 29, Microsoft 28, Amazon 29, Nvidia 29. So, like, if we're in bubbly type valuations, this isn't the peak. There's no way. I don't think so. That's why I think wasn't it MAGZ or MAGS? So yeah, here's just the Mag 7 ETF. You want actually exposure to the Mag 7, but I don't know too many actually here's one for you. RSP. If you're looking for, this is literally the S&P 500, but equal weighted. What does that mean? That means normally in the normal ETF, it's market cap weighted, which means they let their winners win. This does not let their winners win. Every single time, every stock should be exactly 0.25% of this ETF. But it'll eventually, like Warner Bros. Discovery has been on fire, so that grew, but they'll eventually trim out or make it back normal. So every stock in the S&P 500, but equal weighted. I think it's nice to put on the watch list, but I don't think this will outperform the normal tech market cap weighted ETF for the long run. How do you think Costco's earnings are going to do this quarter? When does Costco report earnings? Let me check the earnings hub real quick down here. So we got Costco and Oracle. Wait, December 10th is Oracle, so that's in 2 days. Ooh, AutoZone pre-market. So it looks like AutoZone came out with their numbers. I would love to buy the dip on AutoZone. Ferguson's a nice energy electrical infrastructure play. Casey General Stores, dude, this is some boring like Dollar Tree kind of stock, and man, crushing even like Nvidia. So anyway, yeah, tomorrow is Oracle Adobe. Whoa. Tomorrow will be big. We'll be streaming for that. Yo, if you guys wanted to follow button, we stream every day, by the way. Also, if you wanted to follow button, I sell nothing. I have literally nothing. I have no course book, WhatsApp. I'll never follow you or DM you. Watch out for people impersonating me. Hey, what up, Lulu? Good to see you. Okay, Calm. You know what, Tony? What up? Let's do Calm real quick. I actually just bought more of them in my Weibo portfolio on the dip. So yeah, I made a TikTok about this one as well and a YouTube video. So if you want to learn more about Calm and my second most recent YouTube video is like a full deep dive on Calm right here. So this is the commodity stock. So you never want to have this as a meaningful size position in your portfolio, but I think it's worth owning a little bit of. It's kind of like oil. You don't want oil as a big position, but you want some exposure to it for the certain case environments like this right now. Check this out. Here's what's so cool about Calmain. The top right, the company's worth $4.1 billion. Remember that number. Their whole company's worth $4.1 billion, and they have $1.25 billion of cash on hand with absolutely no debt on the books, no liabilities. So this is a phenomenal position, especially for a commodity stock, to just have literally 25% of your market cap, just your cash on hand. It takes a lot of risk off the table. So it's a $4 billion company. Really, if you do an X cash, market cap, X cash PE multiple, you should only do a $3 billion market cap. And so you're basically buying a $3 billion company that prints a couple hundred million of after-tax net income a quarter. They made 200 mil, 300 mil last quarter, and that's after tax. That's after they pay 50 mil of taxes, 130 mil of taxes. Like, this is insane. Now, the net income is supposed to fall because egg prices have been abnormally high the past year. But that quarter when they made 500 mil was crazy. 500 mil is like it's 10% of the market cap. Anyway, you also get a great dividend. They have a rule where they change the dividend every quarter. It's like whenever they make money, 33% of it gets paid out to a dividend. So that's why it changes every quarter. It's kind of like a surprise. You don't know what you're going to get next quarter. But yeah, $1.30 dividend, $2.30. They did a $3.50 dividend, and I received that dividend. And look at that, a $3.50 dividend. Look at the stock price. It's $84. So that literally gave you over basically a 4 to nearly 4.5% instant return on your money just through a qualified dividend. So if there's ever, conspiracies around more bird flu and burning down other chicken egg facilities, that bird flu and all that benefits co-main. So anyway, maybe have it as a tiny size position. If you want to learn more about them, I just made a whole YouTube video about it. Hey, what up, Beat Dish? And hey, shout out to the member Brian Paul. No way. He says I'm only down 0.5%, same as the S&P and NASDAQ. Hey, that's great news. Wait, what is this one? What up, BTC? He says AII and then XY. Hopefully I can find this ticker symbol. We found it. Check it out right here. There's no volume on this one. Wow, look at there's no volume because it's an ADR. But let's go check out what this company does. So it's a European company and we'll convert the currency from euros to USD. 19 PE, that seems fair. Semiconductor industry is their industry. Okay. Revenue. Let's go to revenue down here. So revenue is down at 19% after it fell 0.2. They are profitable every quarter, which is good news, but it's a bit, these year-over-year declines aren't great. They have a really good balance sheet as well. Let's see. They have 180 mil cash, no debt. Market cap is 2 billion. Just nothing's really blowing me away here. 17% of them, 7 or 8% of the market cap is just their cash on hand, making it, it's not terrible, but I don't think I'd own that one just because it's a weird ADR. I think there's probably a better stock in like on the US exchange. Yo, what up, Jay? He says, good to see the live. Good to see you, man. Hope y'all are having a great day, by the way. If you want to hit the follow button, we stream every day. ASI, what up? Good to see you. I hope we get a Santa Claus rally after the Fed report cuts. So yeah, actually, I think today's the 8th. In literally 2 days, we get our cut. So we can actually see this right here. They have a FOMC meeting on December 10th. So this is the December 10th meeting. There's now a 90% chance of a 25 basis point cut. And we can see the January 28th meeting as well. So the interest rates are going to get cut very soon. So that means your yields on your money market funds and high yield savings account are going to go down. But the interest rate sensitive stocks should go up as well. Like maybe your home builders, your REITs. So, and everything kind of rising tide lifts all boats, How do you feel about Amazon? Yo, Hatem, I love Amazon. A phenomenal diamond stock to diamond hand. It's even if you have the intention to never sell it, it's even worth buying right now. The forward PE is a 29. For Amazon, this is an ETF in one. Their AWS is massive. It's actually the most valuable part of them. Number one cloud service provider in the world, number one market share. It's like a literal more higher market share than Oracle. It's like an Oracle in one. Plus you get the e-commerce, the subscription play, the robotics play, their satellite business, their AI business, grocery store. They own Twitch, advertising play, Whole Foods, it's just an ETF in one. This is a great stock to never sell. And we can see the net income down here. The net income's up 38% to 21 billion after the net income grew 55% after it grew from 10 billion after it grew. So they're the most profitable they've ever been. And Amazon's a great never sell. You don't want to bet against Amazon, in my opinion. It's one you want to own. And if you don't own them individually, you want to own it via the S&P 500 or like the QQQM. Just bought 17 shares. Hey, nice. Hayden said MU. Hey, remind me. Hey, Brandon said PayPal. Remind me to get to PayPal. They're kind of boring. Margin to risk community. Nathan, have you ever used margin? I have never ever used margin, and I don't recommend that either. Taking out debt to buy stocks. It's just not worth the headache. I know some people like, and if I did this, I would have been super successful. But you take out debt at like a 4% interest rate. You borrow $100,000 at a 4% interest rate, and you hope to invest $100,000 and get an 8% return on it, and then pay 4% in interest, and you pocket the difference. You pocket the 4% or whatever. It's just I've never I don't really recommend that. So here, especially in a recession, but that's not now. But anyway, here's Micron Technology right here. If I was a shareholder, I would not be selling at all. The forward PE is a 15. Check this out right here. If we go to the EPS right here, the EPS is literally going to go from $1.40. In next quarter, it's going to be 360 and then 380. The year-over-year growth rates on the net income / EPS really is a 15 forward PE. It's insane. And this is crazy. If we go to the revenue's up 50% after it grew 93. So the sales are growing very nicely, and so is the net income. 3.2 billion net income. This 3.2 billion net income is the same as $2.80 of EPS, and it's supposed to legit be 350 and then 380. And they always beat on expectations. So I'm so bullish on Micron, and this is the kind of stock I think is just going to continue to climb higher and higher. Crazy. How about Regen Cell? Yeah, I don't know what that is. If you have a stock, give me the ticker symbol, but that sounds like some micro cap. But we'll check it out. Personally, I don't use leverage or sell bets. Yeah, hey, that's probably just. Would you recommend opening a margin account? So actually, yeah, big. This account right here is a margin account. If you look in the middle of my screen, they give me margin to take out, but I've never used margin. You have to go you'll know if you're using margin, you have to go out of your way to do it. So I've never taken out ever once used margin, but I did open a margin account because you get the instant deposit bonus and other stuff like that. But it's just better than a cash account, and but never take out the margin, and then there's just no. Okay. Let's see. Market's too volatile to be on margin, but that's just me. Yeah, hey, Jay, that makes sense. How do you think about AGIQ? What's this one? AGIQ. So, this is by SoFi, a SoFi ETF. How much AUM they got on this? Let's see how much expense ratios they're making. So so since they kind of just made this ETF, we can't see the AUM. That sucks. Oh, no, I guess in the middle here. Oh, they have 10 million of assets. Not much. That might be old. So this is their SoFi Agentic AI ETF. I wonder if InnoData's on here. But let's go see what this ETF holds. So Teradyne, that's like a robotics play. Tesla, Palantir, NVIDIA, Illumina, CrowdStrike, ISRG. I actually love all these names except, I wouldn't buy some of these names individually, like Tesla and TMO I don't love, but those are some good holdings, quality holdings. And actually, Tesla's done really good. I want to see Tesla do good because Tesla props up so many other stocks. So Netflix, please. Or are you talking about METU or META? Let me know if you're talking about METU or META. I don't know what that is, but let me go over Netflix real quick and we'll get to that one next. What site are you using? Yeah, hey, what up, Joey? By the way, this is actually a brokerage software where you buy stocks on. If you want to get this app, it's in the link tree in my bio, the very first link there. It's affiliate link, full disclosure. So if you go and deposit $100, we'll both get some free stocks. But check this out. Here's Netflix right here. They're down on the day because Paramount Skydance, I think ticker symbol SKYD, announced a higher bid than Netflix to buy Warner Bros. Discovery. So check this out. Netflix announced the $82.5 billion deal. Now someone outbid them, and every time Netflix, they have to bid more, it's going to be less accretive to the EPS, or even more decretive, I should say. So that's why the stock is falling. They might have to pay more. But I love Netflix. I'd love to buy the dip on them, and it's starting to look attractive to even nibble right here. The forward PE is a 31. Current PE is a 40. For Netflix, that's cheap historically. 300 million premium subscribers. They make $11.69 per user on average per month. The net income is great. They're easily making $2 to $3 billion of after-tax net income every quarter. So that's what's cool about Netflix. RGC. Regencell Bioscience. Yes. Oh, wow. They have a big market cap, an $8 billion market cap. They're making net income. So look at that. The sales are 800 million. Oh, this is from 2017. Never mind. So they must be losing a lot of money right now. So if you go to their balance sheet, look at this right here. Whenever you lose money, but but they have this is from 27. This is old data. I can't give you any thoughts on this one, sadly. There's just no revenue or anything there. Um, my I'm sorry. It's meta leveraged, METU. Okay, so this is a 2x bull meta ETF. So maybe instead, if you don't like doing call options, maybe instead of buying a call on meta, you could just buy a share of this, because whenever meta goes up 1%, this goes up 2%. So it's kind of like a high volatility play. I'm just a fan of owning meta shares individually. It's just a diamond hand. I'm a shareholder of meta. We're up 26%, nothing crazy. But yeah, look at that. On our main account here, on our dividend-only account, every stock is down on the day in here. I think our Roth IRA, oh wow, our Roth IRA is so close to green, mainly from CorMedix, our healthcare play. That one's up 6.3%. Love that one. I like that one more than Region Cell Bioscience. Tesla's PE is hilarious. Yeah, one of the Tesla is unfathomably overvalued, sadly. But I need Tesla to do good because it literally props up so many other stocks and their valuations. I want Tesla to do good, but there's no way I'd ever hold shares of that one at this valuation. But here's Welltower, and I'm saying the super unpopular opinion here. Every time I bag on Tesla, I always lose viewers, but well. But here's Welltower right here. They're at an all-time high. This is your senior housing care facility play, and that's just in such demand right now. They're actually a real estate investment trust, so they have a nice dividend yield as well. But yeah, they're the number one market share, I think, for they're in the S&P 500. Our properties, I guess we can see they're kind of all their senior housing care facilities. Kind of interesting. There you go. Another one that's very similar to this one. I like this one probably a little more right now, low key. It has a higher yield. It's done just as well, or it's done really well this past year, pretty much at an all-time high. Yeah, all-time high today. This one has a higher yield, a 3.4% dividend yield, just as sustainable at an all-time high, and it's super growthy. Check this out. You won't believe it. Revenue's up 71% after grew 38. The balance sheet is phenomenal. One of the most under-leveraged REITs I've ever seen. So yeah. Yeah, no problem. FIX is being added to the S&P 500. You're right. Yo, that's great news. I'm actually surprised. Comfort Systems is flat on the day, but I'm not surprised because they were pretty much at an all-time high already, and they've had such a monstrous rally this past year already. But yeah, that's great news. That should just mean so much passive flows and money will go into Comfort Systems. See, our portfolio is just not down too much on the day. Powell Industries is green. That's actually surprising. Is NASDAQ good? Yeah, hey, actually, instead of buying, a lot of people buy the NASDAQ via QQQ. Check out QQQM. It's the exact same NASDAQ 100 ETF, exact same holdings, exact same strategy. Those two ETFs have moved identically. The only thing that changes it, the only difference is this one has a way lower expense ratio fee, a 0.15% lower expense ratio fee for the exact same ETF. So if you're a person that is just holding QQQ right now, you're welcome. You should just instead maybe switch that to QQQM for the future. Run also by Invesco, run by the exact same people. I work for a Comfort Systems company. That's so cool, Mike. That is so cool. Yeah, Comfort Systems, this is basically my favorite company of all time. And they're most skilled people, MEP workers, and they're just in such demand right now. These skilled workers for these complex, data center projects. So I really like FIX. And they service and maintenance over 10,000 buildings, MEP work. And they did 15% of the revenue is their servicing business, where it's reoccurring revenue where they service the machines and everything. Anyway, FIX is a monster. Hey, what up, Triyun Kingdom? Are we rich? Well, hey, Professor Pumpkin, good to see you, homie. He said INPOY. INPOY. This is another ADR right here. How'd you learn to analyze? Well, I've just been doing this for a super long time. I'm definitely not an expert though. Don't listen to me. I'm just a college student. By the way, also I sell literally nothing. I have no course book, WhatsApp, never follow you, DM you. But if you do want to support me, the only way to support me is just hit the follow button. We stream every day. And best way is actually subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. But yeah, just type in YouTube Nathan Robert. So this is a company. We'll convert the currency from PLN to USD. What is that? Korea currency or Luxembourg is where they're headquartered. Okay. So it is an ADR, so you're paying that ADR fee, which is no big deal. But whoa, this is really impressive numbers. Specifically, their top line revenue grew 57% year over year. After grew 39, after grew 26, after grew 100, after grew 100. I can't believe that they're on an absolute streak of growth here. Look at that annual revenue growth, and the net income as well. No way. So it looks like the net income did fall 32% year over year. Or actually, that was a little one-time adjustment. These numbers were propped up. The core business, the profits actually grew 6%. So they're making easily 100 million of net income a quarter. Well, that's the before tax number. Probably around like 80 to 90 mil of net income a quarter. They pay a dividend. No, they don't pay a dividend, and they don't. Interesting. Let me go and a holding company which engages the management of e-commerce enabled platform. It provides delivery, fulfillment, and two-door delivery services to online merchants. So maybe in the country that they're headquartered in, they help with your delivery. Wait, where does all the revenue come from? I hope that'll break it down for us. Market. Oh, so it's a Poland. Okay. So 90% of the revenue is Poland, I guess, then all these other countries as well. Okay. That makes sense. There you go, like a Poland e-commerce play or something. Maybe I'd rather buy an Amazon. I don't know. Can you surely explain what we were looking at? Stocks? Well, yeah, we're looking at stocks right now. Yeah, basically, we're just looking at individual companies like Amazon. As these are publicly traded stocks that you can actually buy. Anyone can buy them, and these corporations, these stocks, all they want to do, like in the long run, I'm always a believer. Economies grow, economies innovate, and companies do everything they can to give value to the shareholder. So there's always some sort of bad news happening in the market, but in the long run, I'm trained America and trained stocks, and I think it's just worth buying and holding stocks. You don't want to just if you have a lot of money in cash, it loses to inflation every year. We all know that, but you can offset that by investing. And this is not get rich quick at all. It's anything. You want to get rich slow. You just want an 8 to 10% CAGR. You'll double your money easily under 7 years. So you want to compound your money at 10% a year, where you turn $100 into 110, and then that compounds, so that 110 it turns to 133, and then 100 it just spirals higher. I really want Uber. What do you think is the time? Let's check out Uber, man. I love this stock right here. A phenomenal never sell. Around this 84, under $80 would be a freaking steal of a deal, because check this out. I mean, well, their current PE is an 11. This was a one-time adjustment, but look at the forward multiple. Uber has a forward PE of 27. And again, we're looking at the forward PE because they had a little funny money one-time adjustment to their net income this quarter. It says they made $6.6 billion. They didn't actually. They only made $1.1 billion, which was still a record Q3 profitable quarter. So, yeah, I love Uber. Great diamond hand stock to never sell. There is some increased competition from like Waymo right now and Tesla robo taxis and all that stuff. But Uber actually is implementing like Waymo and stuff into the app, which is cool. But yeah, they're also they took a huge stake in a Grab. I love that as well. But yeah, Uber easily is making now, these year-over-year growth rates are insane. But they're making over $1 billion. Call it, if you average it out, yeah, they're easily making $1 billion in net income a quarter. They're deleveraging their balance sheet. The liabilities used to be 65% of the assets. Now it's only 53. So you have more equity in the company. And they're investing so much in the future. You know what? I'll show you this right here. If you go to ticker symbol GRAB right here, ticker symbol GRAB, if you're wondering what is this stock, what do? They literally do exactly what Uber does, the exact same thing, but internationally. Uber's now, my point being here, Uber's the largest shareholder of this company. They're the largest shareholder. They own 13% of all of the shares here. So 13% of this revenue kind of just goes back to Uber. But it's instant international diversification for Uber, which is genius. And they have stakes in a bunch of other publicly traded stocks as well. We kind of see that often, like NVIDIA, for example. We can even see the NVIDIA portfolio. NVIDIA is so big that they own some individual stocks. Like they own a lot of CoreWeave, APLD, and ARM, and Nebius, and some of these other names. So, yeah. Grab is a big one for Asia. Yeah, it's like we know the commodity of ride sharing and food delivery or just delivery, whatever, is ride sharing is universally needed. So pretty cool. InPost had an acquisition, so their net income is having a hiccup, but I believe. Oh, so that's what that was, Professor Pumpkin, when we were looking at the one. Okay. Okay. Yeah, do you have a stock ticker for that? Okay. Hey, yo, I haven't seen you in a while. Good to see you, Shark Water. He said, I'd like to get your opinion on Allstate. Yo, this is an insurance company. I haven't looked at this one in a long time. I actually own Progressive Corp, but let's check out Allstate right here. You're in good hands, right? So you get I love these insurance companies because you get a high yield and usually a low payout ratio. Check this out, a 1.95% payout ratio, or a 2% dividend and only a 20% payout ratio. So just off this math, this company, I bet has an 11 or 12 PE. Let's go see. If that, yeah, they have an 11 and a half PE right now. So, or wait, no, I'm stupid. That's the industry average. So look at this. These insurance companies always trade at a low industry average multiple. But yeah, it says they're trading at 6.5 times net income. Allstate protection, protection services, corporate. Let's see how that's growing. So single digits, 5, 7, 7, but it's hard to grow big numbers. Let's just go look at the net income because that's what matters. This is insane. Can we look at it on a quarterly basis? Yeah. So 3.7 billion this quarter, 2 billion, 500 mil. It's always like insurance companies, their net income always is choppy. Like sometimes they'll lose money, but then have a massive spike. But yeah, we know the insurance companies are milking us. And yeah, if that's a record net income quarter, their numbers are a little tricky because all insurance companies, like the liabilities are the same as the assets, but they have this float where they pocket the difference, where they basically get this cost-free loan of money where they invest it into something, collect a difference. And specifically right now, they put it in short-term treasuries. Let's actually see, total premiums earned 15.3 billion up from 14, but then they should have net investment income. Yeah, check this out. So what they're doing with the cash that is basically, they have this cash that they eventually will have to give back to the customer, but they're legit making 600 to 700 million on that money every month. Pretty crazy. Or a quarter, I mean. I've been streaming for a long time and my head's starting to hurt, so I'm sorry. By the way, if you want a default button, we stream every day. Okay. Ooh, Brian said INPST. Yeah. All I saw. Oh, unfortunately, I looked that up. I cannot view this company right here. Maybe there's a different ticker symbol, but InPost is not. Maybe if I just type in InPost, I can find it. INPOY. We found it for you. Dang, looks like they're at an all-time low right now. Was this the company we were just looking at? 22 PE? I don't remember. I think this was the company we were just looking at. I don't know. Yeah, this was. Okay. Yeah, Progressive Corp. Actually, I'll show you that real quick. I am down on my insurance position. I have 4 shares of Progressive Corp. I like this one because they've had a great stock. They have a low payout ratio where the dividend yield is only 0.1, but they do this yearly special dividend, which is pretty cool. Which is better, QQQY or QQQM? QQQM. Yeah, definitely QQQM. This is a covered call ETF. Yeah, this one's at all-time lows. Yeah, definitely not that one. Hood, please. What up, Joe? He said Hood. I actually. Oh, and Isaiah, we got to look at USB, US Bancorp. My bad there. I forgot to get to that one. What is this at the top here? I actually want to read this. Robinhood expands reach in Asia with Indonesia acquisition. That's so cool. If you didn't know, Robinhood prints money and they can easily afford to do these acquisitions. Now, this is what I don't believe in. This is why Robinhood deserves all the hype around them. I own some shares. We're up like 9x on my Robinhood shares, and I regret every freaking share I've ever sold of them. But check this out. The revenue is up 100% year over year to 1.27 billion revenue. So they made 1.27 billion revenue and they netted on that 556 million. That's after they paid 130 million of taxes. Like they really did net 550 million, which means their net margin is a 43 record net margin. They had a one-time adjustment this quarter. It wasn't actually 90%, but everything here is headed in the right direction and they deserve their monster forward. What's their forward PE? 56. Yeah. So I am a shareholder of Robinhood and SoFi and Futu and Webull and Dave, all the fintechs, but that's one I'd love to buy Robinhood, but its current valuation isn't too amazing. So let's look at US Bancorp right here. Got channel where you learn all the stuff for PE, for example, what that means. Yeah, hey, I actually have a YouTube video on my YouTube channel where I just explain all the metrics and stuff. But yeah, I don't like teach, or yeah, I don't have a course or book. Yeah, well, I sell nothing at all. So watch out for people impersonating me. I'll never like follow you or DM you or anything. But yeah, I sell nothing. Only way to learn really is just watch the live streams and my YouTube videos. So anyway, here's US Bancorp. This has actually sadly been one of the worst performing banks, and this is a bank you buy just to kind of maximize your income. Let's actually see what it. Let's actually go look at the. I think they have a near 5% dividend. Let's see here. Um, Sorry, my Wi-Fi is extra bad today, apparently. There we go. So, oh, actually, look at that. So you get a 4% dividend here on US Bancorp. So a 4% dividend yield. And let's see the net income. Very great, very consistent. They're making easily 1.6 to 2 billion of net income a quarter. Phenomenal growth rates. So they made 2 bill of net income this quarter. Actually, net income to the common shareholders, though, maybe we look at this one because actually normally, so money's going to someone, but some founder, but 1.9 bill in net income they netted. Let's go see what the cost of the dividend is. The dividend cost. Hey, so yeah, they can easily afford the dividend. If you look at the very top, the dividend cost 850 million in net income a quarter, and they can so easily afford that. And since they have so much leftover money, they're even doing a couple hundred mil of buybacks right now. I do wonder what's the real reason this stock has underperformed so much, because they're the same prices they were back in 2016. You know, just a JP Morgan, a Goldman Sachs, even the Royal Bank of Canada, they're all pretty close to all-time highs and are well above where they are. So it's weird. That's weird. So, oh no, Joshua said, I bought some SE stock over the weekend and it immediately dropped 4% this morning. Well, we've all been there before. MELI, SE, these are all very similar companies. Hey, remind me to get to Snowflake, Ito. My bad there. I've been wanting to get to Snowflake. So here's Mercado, basically international international Amazon. So if we go to where the revenue comes from, it's 55% of it is Brazil, then Mexico, then like Argentina. So mostly a South America kind of e-commerce play. I think they do some fintech services as well. Yeah, financial services, credit revenues, commerce products. But right now they've been printing net income easily 400 to 600 million of after-tax net income a quarter. Like they really do make easily over 500 mil of after-tax net income a quarter, and it's growing it very nicely. Sales are up 39, after grew 35. So this almost reminds me, it's just like an international Amazon. Low key, I think I'd rather own Amazon. This one is more expensive. They probably deserve it because they're smaller, but they have a 39 forward PE. Amazon's at a 29 forward PE. So Amazon's actually significantly cheaper than this stock right here, and arguably maybe a better investment for the long run. I don't know. Sounds like that's like an emerging market, or I guess like a one South America specific Amazon play, which might have more growth than normal. I don't know. The numbers are good there. Those numbers were good. Snowflake. Wait, hey, are you still here, Ito? We'll look at Snowflake after this. Can you look at Interactive Brokers? Yeah, so we looked at Robinhood. We looked at Webull earlier. Here's another brokerage, Interactive Brokerage, IBKR stock. Nancy Pelosi actually just bought a little bit of this company. What I love about brokerages and this industry is that they print net income. Their margins are so insane. Check this out right here. If you go to the net income, or actually net margin, their net margin was a 44%. They're easily making $1 billion plus in net income a quarter. They made 1.19 billion in net income this quarter, up 42%. That was a massive beat. Analysts expected 52. They did 59 cents. So yeah, these brokerages make a lot of money on interest income. Dang, that's up 11% year over year on them. Commissions as well, that's up 23%. We can see their brokerage accounts. They have 4.1 million paying clients. Their DARTs, or daily active trades, are 3.6 million. Another one that I actually really like, almost more than that, so that's Interactive Brokerage. Well, look, you see this app I'm on right now? This app I'm on is called Moomoo. They're publicly traded. Their ticker symbol FUTU. Oh, so sorry. I actually like this stock a lot better. I'm biased because I own them. I got coconut water right here. Let me actually. Okay. So here's Futu right here. This is another brokerage, and they also make a lot of money from interest income. Look at the growth on their interest income right here. This is ridiculous. It's up 79% year over year. Their brokerage commissions are up 90% year over year. And then their other income, which is their crypto, have triple digit growth for the past 4 quarters, which is actually why I just picked up today another share of FUTU stock. Yeah. So again, I rose my cost basis on them. My average cost is 124. We were buying some down here. It used to be lower than 124, but I don't mind buying. I don't mind dollar cost averaging up because remember, quantity of shares always beats. The smart investor focuses on their quantity of shares. So yeah, Futu, I didn't mind. If the PE is still fair. They do a yearly special dividend. Look at this net income. They made $413 million net income. That net margin was a 50%. So that's why I'm saying these brokerages have crazy margins. Well, yeah, if you wanted to get this brokerage, this stock app I'm on right now, that's a really great app to buy stocks on. My favorite one. It's in the link tree in my bio. That very first link there. So yeah. Oh yeah, speaking of coconut water, no way. Someone said Han said cocoa. This is the number one coconut water play. You normally think this is a super competitive industry, beverages, but they literally have a 50 or a 48% market share for coconut water. Number one market share, and they own Vita Coco, if anyone's heard of that brand before, and check out the growth. This is nuts. It's up 42% to a super new record. I couldn't believe it. So the Vita Coco organic brand is growing insanely. They also have, I tried Vita Coco pineapple coconut water, and maybe I was just dehydrated, but that was literally the best drink I've ever had in my life. And now I look for them at the stores and I never see them, but yeah, they also have no debt whatsoever. That takes a lot of risk off the table. Coco literally has no debt at all, no debt or books. No, they don't owe anyone any money. Completely debt free. The sales are up 37. They're making net income every quarter. So I do like Vita Coco. I don't love their current valuation after this current run up, but yeah, 39 forward PE. Also, another reason that a stock they randomly gapped up on one day is because the administration lowered the coconut water tariffs. So yeah. Toasty said, great streams, man. Gonna motivate me to start up. Hey, nice, Toasty. Not financial advice. Nothing in this is, but, just buy the S&P 500 and get your money compounding at 10% a year. Have that as the backbone of your portfolio. Then play around with some individual names that you know and love. Don't just buy these random small cap stocks you hear people promote on Twitter, whatever. Buy real good companies like that love, and use, like Meta, McDonald's, Google. I got Amazon, Coca-Cola, Ferrari, like just great companies that you can just don't just buy companies you've heard of. Like you've probably heard of Ford before. I wouldn't buy Ford stock, but I loved a lot of these names: Google, Meta, Amazon, Nvidia, Apple. Okay, MicroStrategy. Hey, yeah, so this is basic. Oh, what do you think about Neo? Yo, unfortunately, this is a stock I don't like at all. Thoughts on AU? Maybe we'll check that one out. So yeah, here's Neo right here. This is your Chinese electric vehicle play. The reason the stock is at like this all-time low, like this used to be $60, now it's $5. It's because they just burn through too much money. And they're Chinese, first of all, so we'll convert the currency to USD. But so these are in USD losses. They lost 488 million, 700 mil, a billion. So they've literally lost nearly 4 billion of net income in the past year. And the whole company is worth 12 billion. So they've lost 20% of the whole market cap, just the net income the past year. I just don't love these names because it's not just Neo, it's also Lucid. I would never buy Lucid or even Rivian too, sadly, just because they burn a stupid amount of net income to trust. And they're diluting you while the stock's at all-time lows. They're issuing bonds. Like it's just, they're not in a good position. And Tesla a long time ago, and Tesla cut the prices, has sent them even more into bankruptcy, having to lower their prices. And it's just been they just sell a commodity, electric vehicles. What would you like? What's the like? Let's say they get profitable. They're not going to have that high of a net margin like it's cars. Anyway, so I don't love that one. I wouldn't own them. DRI. This is an interest rate sensitive one. Oh, hold on here. There we go. So this is Darden Restaurants. So they own Olive Garden, or let me double check. Yeah, so Olive Garden is their largest restaurants. So they own Olive Garden, Longhorn Steakhouse, and other restaurants as well. But yeah, it's like a restaurant play, and they've actually been doing surprisingly well. I know a lot of restaurants are struggling right now. Like you look at Wendy's stock, Jack in the Box, Cracker Barrel, they're all at all-time lows. But look at it, they're easily making 200 to 300 million of after-tax net income a quarter, and that's real. They really are making a good amount of net income. So what's the multiple? A 16 forward PE, that's a better buy than the Cheesecake Factory. A lot of people love the Cheesecake Factory stock. What site are you using? Yeah, hey, this is actually a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. Oh, hold on, oh my goodness, I gotta mute this guy. They're trying not to spam there. That's not cool. Okay. Let's see here. Now the whole chat's messed up. Dang it. But I'm quick with my self-moderation. Okay. Let's see here. Yeah, DRI, that's Darden Restaurants. So it's really interesting. But yeah, look at these other restaurants right now. Sadly, yeah, here's is it CBRL? I want to find that stock. Yeah, we were just looking at this one. Wow. All-time low, I think, on Cracker Barrel. You know, they had that logo change. They're the same price. The stock is lower than it was in 1997, and it's not just them as well. Here's Jack in the Box. Same price as they were in 2005. And Wendy's, we all know Wendy's has done terrible. They're the same. They're lower than they were in 1997. It's just real sad. These restaurants are really getting crushed right now. Okay. Nostram, what up? And actually, I'm a little behind here. QCSL. Wait, it's QCLS. So we're not going to cover this stock, sadly. If you look at the top, this is some micro cap. They're only worth $28 million, and they're at an all-time low. We just don't cover these names because they're almost certainly just going to continue to go lower. Yeah, remember the whole company was worth like 20 million? Well, they lost 2.8 million, which is over 10% of the whole company they've lost just in this quarter. So no wonder this stock's at all-time low. It's a revenue-less startup. If we go to the revenue, it says no data because they've never sold a product or a service. So I don't really know who's buying this name. You shouldn't be, unless you want some kind of short-term swing trade momentum, but I wouldn't touch that one. Let's see here. Snowflake. Yeah, so let's check this out. Snowflake, this is kind of like Palantir's biggest competitor. They've actually now partnered with Palantir. Let's see if there's any news over here. Snowflake reports strong Q3 earnings, 29% revenue growth, expands initiatives. Snowflake doubles AWS growth. Well, let's actually check out the earnings hub. Let's see what they have to say. So product revenue grew 29%, driven by record customer additions and stable net revenue retention. AI-related revenue reached 100 million annual run rate ahead of schedule. That was supported by strategic partnerships. Remaining performance obligation increased 37%. That's the money they're basically owed. So let's go check out this is the one thing that scares me around Snowflake though. If you go to the bottom line, their net income, they lose lots of money, 300 million net income a quarter, but they are narrowing their losses. Check this out. They only, they narrowed their losses by 11% year over year. And that was more, they lost less than analysts expected. Analysts expected them to lose 96 cents of EPS. They only lost 87 cents. So the stock they initially rallied, but then they've kind of sold it off a little bit. Yeah, dang, look at that. So they initially went up, but now they're selling it all off. These net income losses are the one thing that I just can't, that just scare me so much that they lose 300 mil a quarter. But it's not like analysts don't know this. But the top line growth is so insane. First ever billion a revenue quarter. The product revenue, the growth is insane. Sales are up 31, after grew 30, after grew 50, after grew 100. So as long as they keep up the top line growth and keep narrowing their losses at the rate they are, they probably should continue to do pretty decent. Auto buy for 25 a week ain't that bad of an idea. Yeah, absolutely. 25 a week, 100 a month. It's as simple as that. That'll compound you. Yeah, actually, here's a fun fact. I know probably no one's in here is 18, but if you invest if the day you're 18, if you invest $8,000 and then never invest another penny again for the rest of your life, just an 8.5% CAGR, you'd have like 400 grand at 55. Just with that on $8,000 at 18. But that's the time on your side. Let's see here. Yeah, everyone wishes they kind of started investing earlier than they should. Again, it's not get rich quick. It's like you just want 8 to 10% of your money back a year. And usually you can get those just buying high quality stocks, even more than that. That's why like this strategy of just buying and holding great stocks even beats out the option traders and the crypto people literally just buying and holding high quality names and not selling them either. Because some of my biggest regrets aren't stocks I've had huge L's on. It's actually trimming out of great companies like Robinhood. I sold all my shares basically for a 3x, and now we're up 9x. And like SoFi as well, like we didn't do the smart thing there, but you learn over time. But yeah, best time to invest was 10 years ago, but the second best time is today. That's a good quote there. Okay, so let's see. Marathon, so this one, unfortunately, this is another one of those Bitcoin mining companies. Oh, yeah, we already have Bitcoin overlaid on it. So there's just not really a real scenario where I'd recommend Marathon Holdings over actual Bitcoin because this company just mines Bitcoin. And, I'm not just picking on Marathon. I've looked at all the Bitcoin mining companies like Hut 8, Corzi, Clean Spark, all of them. And they just don't in the long run, ever consistently outperform Bitcoin. But some of these companies are converting their like GPUs into like cloud hosting right now, which is making like Iris Energy a ton of money. But just like a company that just owns a bunch of GPUs and mines Bitcoin all day, like that doesn't get me excited. There's nothing proprietary and it doesn't outperform Bitcoin. So just probably would rather own Bitcoin, yeah. And I actually don't own any Bitcoin. I actually own kind of the picks and shovels of the whole Bitcoin. I own Robinhood. I own SoFi. I own Futu. I own Webull stock, which whenever someone does a crypto transaction, they make a little juice of a commission. All right, we'll do a few more stocks here. And I gotta go, sadly. But Dylan said DLR. Is that Digital Realty? This is a data center REIT. You're really buying this to max, or you buy this for the income. It hasn't really done too well. The stock is actually the same price it was in 2021, so it's been flat for a couple of years. But you get the 3% dividend, which still has massively underperformed, even when you include the 3% dividend. It's a triple net lease data center company that owns the triple net leases for data centers. It's a specialty REIT. So yeah, I don't know. I actually own Iron Mountain, another data center REIT. I don't. I'd probably rather just own the actual I don't know, maybe like a Google. I was trading and lost 4.5K. Yeah, dang. That's why you'll sleep well at night if you just buy and hold great stocks, and they can be just as fun, just buying and holding them. CG. Is that Carlyle Group? Yeah, so here's Carlyle Group. This is kind of like an asset manager, private equity. They own a bunch of stakes in other companies. I think they just sold off RuneScape. They used to own RuneScape, but they actually sold it off, I believe, really recently. But they're making great net income every quarter. It's choppy. Like they make money and lose money just because of how they make their money. But yeah, they make good couple $100 million net income every quarter. Looks like this quarter they missed on revenue by a massive chunk. They missed on revenue and net income. But the stock is still doing pretty good. I know they have a nice dividend too. What's the yield on Carlyle? 2.5% dividend yield. Not too shabby. I like BlackRock stock as well. BOK. With their new crypto ETFs, BlackRock is making a lot of money on their alternatives revenue. Oh, dude, there's no way. No, this is a fantastic company, and I love this stock right here. I just recently put them on my watch list. Where are they? Oh yeah, ATD stock. I don't want to try and pronounce their name, but they own Circle K. They own a bunch of gas stations. Check this out right here. Circle K. Okay. A bunch of gas stations right here, and they have they sell I was just at one, and they have this deal where it was $5 where you get a Monster energy drink, a slice of pizza, and this food. So they're expanding with their food business, which is pretty cool. I was reading an article about them. I own their biggest competitor, the company that does the exact same thing. But look at this company. They're easily making 500 to 700 million of after-tax net income a quarter. It's great. And the dividend only cost 130 million. Since they have so much leftover money, they do massive buybacks. They did 850 million of buybacks this quarter. So the net income's up by 4.4, but the net income per share is up by 5.3. Not too shabby. So I actually own, instead of them, Murphy USA, MUSA. They do the exact same thing. Most of their Murphy USA like gas stations are next to Walmart's. So yeah, Murphy USA pretty much does the exact same thing. And you wouldn't believe. So we looked at, I actually want to go over this. No one really cares, but y'all are not going to believe this. This is the sole reason I bought MUSA. A lot of people like them or like oil and gas stocks like that for their high dividends, but this one has a super low dividend yield. But look at the total shares outstanding. It's in the bottom left right now. If you get this, this is insane. The total common shares outstanding, or actually this is even the better metric, that the diluted weighted average shares. So that includes employee stock options and all that. But we'll just look at the total common shares. They've bought back 7.5% of all the shares, after they bought back 5% of the shares, after they bought back 8% of the shares, after they bought back another 8.5%, after they bought back another 7%. So literally in 2020, it goes back forever. The total common shares were 29 million. Now the total common shares today are 19.29 million. Every quarter, the total common shares outstanding go down. Here's what that does for you. Again, the net income fell by 13, but the net income per share only fell by 6%. So the EPS growth rate and the net income growth rate should always be the exact same. The only thing that changes it is the share part of the ratio, so that EPS fell less. That makes the PE ratio go up, or that makes the PE ratio go lower, I mean. So it gives you more ownership in the company, makes the dividend cost less. So actually, that's why I own Murphy USA. But I love that one too. It's almost like the better version of them. Kuche has a better, like double the net margin of them. They tried to buy 7-Eleven in Japan. Really? I wonder if that went through. Okay, are we buying Netflix? What up, good time? Yo, Netflix is starting to look super attractive at like low 90s. I mean, the forward PE at a 31. Not too shabby. Hey, Ahmed, what up, dude? He said Astera Labs. Yeah, hey, try not to. Let's get to Astera Labs right here. Yeah. $30 billion company right here. I wonder, I know there was some like bad news. So iLab introduces NVLink Fusion connectivity solutions for AI infrastructure. Not too shabby. Let's go look at their, this is what I love about this company. This is why I put them on the watch list or on my watch list. The orange line is what the analysts expect them to report every quarter, and they always beat on expectations. Massive beat on revenue, and that means a massive beat on EPS, which is net income as well. So the net income expected was 23. They did 50 cents. They beat by double on their net income and on their EBITDA as well. Like, it was a triple B quarter. No wonder this has such a high multiple, like expensive, stupid expensive multiple. The sales are up 103 after it grew 206. They're super profitable for the first time ever. So what's the forward multiple? 115. So they're trading at 115 times next year's net income, but you really do a 2 or 3 year out PE multiple because of how explosive the growth is, like, just became. And incredible growth stock, I think. What's one growth stock you'd recommend I start buying for my kids' brokerage account? Well, actually, QQQM, first off, this is like the perfect ETF. If you don't know which one to buy individually, this ETF right here is it's even worth buying right now. It breaks your money up for you into all the tech heavy. It's called the NASDAQ 100. QQM is the lowest expense ratio way to get exposed to the QQQM. But I would either buy this or buy some of the top names in here: Nvidia, Apple, Microsoft, Amazon, Google, Meta, Netflix. Any of those names I would approve of. I wouldn't do Tesla, but Netflix, even right now, looks good. Meta, Google 29 PE, Amazon 29, Broadcom might be a little expensive, but Microsoft, dude, Microsoft, a phenomenal never sell name. Every company in one way or another uses Microsoft, and it's such a boring name that you like. But it's also keeps up the growth. They raise their dividend every year. They do share buybacks. They invest into AI. Like, I buy QQQM or a Mag 7 name like a Microsoft, a Meta, an Apple, Amazon, and you won't be surprised. Those stocks are the ones that'll continue to return 10% plus of your money back a year. And for your kids' brokerage, that will do great. What about DJI? Is that the Dow Jones Index? And let me know. I think you're talking about the DJ Dow Jones Industrial, which is this is called the Dow 30. They own 30 names in here. Oh, I guess that we can find the ETFs. Like, oh, DIA. Okay, so here's an actual. So that's an index fund. There's DI or DJI is an index fund. So that's on an index. We need an exchange traded fund called an ETF, which is ticker symbol DIA. You can buy index funds, just not on brokerages or not on this one. But so let's check out DIA right here. It's the exact same thing as the Dow 30. And let's go see what it owns. I am actually curious because I have not looked at what the exact weightings of the Dow 30 is. I know they have like Microsoft and McDonald's, Nike. Actually, I wonder if they remove Nike. Sorry, my thing's a little slow right now, but check this out. Goldman Sachs is their largest holding, then Caterpillar. So it's like industrials, then Microsoft, Amex, Home Depot. This is like a way, the DIA is a good way to get away from the super tech heavy, maybe NASDAQ 100. Again, you want to be tech heavy. If you weren't tech heavy before today, you probably regret it because of how great tech is doing and stuff. If the stream's lagging, it's not your fault. It's me that's lagging. Oh, man. I'm looking at the kilobytes per second upload rate. It should be extremely laggy right now. Oh man. Yo, what up, Jay Slove? Yo, we're almost at the 2 hour mark anyway. If it doesn't fix here, we'll probably end the stream. By the way, if you want to hit the follow button, we stream every day, sometimes twice a day. I might try and do another live stream tonight. Dang. The Wi-Fi getting me again. Oh well. Anyway, the DIA ETF, put that one on your watch list. This is another good one to maybe get diversification away from the tech-heavy S&P. And their top names like Goldman Sachs just continues to do phenomenally. Oh, well, it says the stream is completely offline right now. That's not good. Is the Wi-Fi that terrible? I can't believe that. I can't believe it. Oh my gosh, now we're getting the notification. Yep. Okay, oh, it says we're back. No way. 26,000 kilobytes a second. We're back. Okay. We'll stream until it doesn't work anymore. I gotta reconnect my phone real quick. Oh, you like my wallpaper? If you can even see it. Okay. It says it's fine now. Okay, let's hope so. All right, we should be good now because it says the upload speed is good. Oh, it says we're in the green now. Okay, let's get back to this analysis here. What were we looking at? I don't know. Oh yeah, the Dow Jones is a cool ETF right there. DJI or DJA. So let's go see how the market's doing really quickly. We haven't really looked at how the market's doing in a bit. Yeah, the QQQs, actually, they're off their bottom right here. Maybe we've locked in a bottom on the day because the market closes in 30 minutes and the market's down 0.45% and we are down 1.26%. So make sure you hit the like on the stream for me. Hey, what up, Plasma? Good to see you, man. And Marco, I'm 24 using Fidelity. My ETFs are FXAIX and QQQM. No, dude, QQQM, you said, am I being an old man? Am I not aggressive enough? QQQM is that's the exact thing you want to own. I think you're doing everything right, my friend. All right. Perfect. So what up, Nick? And what's a good one for nursing homes? Yo, Welltower, ticker symbol WELL. Also, Care Trust, CTRE. This one not only has nice stock price appreciation, but also a dividend. Yo, Northern Jays, what up, man? Good to see you. But yeah, CTRE is one I really like. You get like a 3.5% dividend yield on this name as well. Okay. Well, it says the thing's lagging again. Of course it is. Okay. Yo, what up, Casey? Says, I loaded up so much on CoreWeave on their 45% dip. Hey, nice. Actually, we can check out CoreWeave real quick. Yeah, apparently, today's just not my day, apparently. This doesn't this hasn't happened in a while. All right, we'll try CoreWeave, and then we'll probably end the stream here. So let's go to CoreWeave. CoreWeave is actually owned by NVIDIA. If you go to the NVIDIA portfolio right here, their largest holding is actually CoreWeave. I do kind of think in the long run, they are kind of the bag holders. They are buying these really expensive chips, and There's they're saying like 15 years from now, the value of the tens of billions they paid for these chips, kind of like a new car, like will literally be worth zero. And there's this depreciation thesis, and I don't know, but anyway, these chips that they have right now are in such demand. They literally have a $55 billion backlog. 15 billion of that is from Meta. Another like 20 billion is OpenAI. Or I'll just show you this right here. Revenue growth is fueled by large contracts, including a $14 billion deal with Meta and a $6.5 billion expansion deal with OpenAI. Their contracted backlog doubled to $55 billion. So that's $55 billion of the revenue they haven't really recognized yet, or not. But yeah, I love them for the growth. The top line sales, they've had triple digit growth for the past 4 quarters, but they're not profitable. They're still losing 100 million net income a quarter. They're still expected to lose EPS and lose net income for a while. But anyway, the sales growth is insane. This was already a record 1.3 billion. It's supposed to be 2.3 billion. So yeah. Yo, what up, Casey? What app do you use to mirror your phone? Yeah, this is an Apple TV. Yeah. What do you think about Bloom Energy? They have nice growth expectations. Hey, what up, Silent MC? What about Nova Nordisk? Yeah, let's do Nova Nordisk real quick. What do you think about Adobe? Yo, Adobe is interesting too. We'll try and get that one too. So here's Nova Nordisk. This is the company that owns Ozempic and Wegovy. So it's a pure weight loss prescription play. Like Elon Musk is on Ozempic right now. And check this out. 93% of the revenue comes from their diabetes and obesity care products. Now, unfortunately, the most recent earnings report was not too good. If you go to the revenue this quarter, they expected 12.1 billion. They only did 11.8. So they already missed on the revenue, and it was a bad miss on margins too. So despite that, the revenue still grew 10% year over year. So the revenue's up by 10, but the net income fell by 22. And that's not some one-time adjustment either. Like the profits really did fall 26%. So that means their margins are going down. That's because they're selling their weight loss prescription in the United States and agreed to reduce the prices on it by like 50% in some cases. I think they also might get their Ozempic added into Medicare and Medicaid. But one of the reasons, this is super sad, but one of the reasons why I think their PE is a 13, and they honestly deserve a 13 PE potentially, is because they lose their exclusivity for Ozempic in about 2 years. So that'll just be so commoditized. I mean, there's already a lot of competition from Eli Lilly, but a company that's missing this bad on revenue, losing their margins, losing exclusivity, super sadly, might deserve this 13 PE. They have a nice dividend, though, a 3.8% dividend. But there's just a lot of risk. But all that being said, that might all be priced in, Like it's not like this is new information. Maybe that's all priced in the stock. I don't know. But I'd be careful with that one. Maybe it's a small position. Hopefully that was helpful, though. I was kind of bearish on it. But so here, I never do. I try to just be completely fair. I don't want to be biased. I never want to, seem that way. I'll bag on everyone's stock. I don't care. And but anyway, here's Adobe right here. Another stock kind of being hurt by the AI thesis. They're saying in 10 years from now, will we need Photoshop? Will we need After Effects as much as we do today? Because AI could replace it. People are already making fantastic looking logos, AI generated and stuff. But I'm a believer that humans are always going to need the final touch on art and stuff. So this might be on price from an AI loser to an AI winner. I don't know. The forward PE is a 19. That might be fair on Adobe. So let's check this out right here. If we go to the net income, they're easily making 1.7, 1.8 billion of after-tax net income a quarter. And what are they doing with 1.8 billion net income a quarter? Well, if we go to the top here, they're literally doing... Where's the buybacks? Yeah, at the top here, $2 to $3 billion of share buybacks every single quarter, no matter what. So that's what's so insane. And here's what the buybacks do for you. If you go to the net income's up by 5.2, but the net income per share is up by 11 because the share part of the ratio went down because the share buybacks. And, if the EPS goes up more, that makes the PE ratio go down. It gives you more ownership in the company. Let's see what the EPS expectations are. Yeah, look at that. The EPS, they always beat on expectations every quarter, and it's still going up. But they're just kind of in this AI, kind of like Salesforce too, and some of these other names. So, interesting name there. I probably maybe have it as a small size position to nibble on. Hey, what up, Nick? He said IDEX. Hey, is that the ticker symbol for, what's that ticker symbol? And we'll check it out. Yeah, that's kind of the thing about Adobe. SEZL has some great momentum last week. Let's check out IDEXX. Let's see if we can find that one. IDEXX. Oh, it's IDXX. Okay, here's the ticker symbol. We found it. I got you. Hey, shout out to Nick. He's always here. So, IDEX Laboratories. So, they are expensive. They're trading at a 50 forward PE. Um, but they probably deserve this multiple. They had a massive gap up on earnings. Nick says this is 40% of his portfolio. I bet you it grew to that size, like from all these nice stock price appreciation. I believe I remember looking at this one. It's like some animal health care kind of company like this. Yeah. So animal data, online tests, DNA, whatever for pets, point of care, laboratories. So I don't know. I guess they some kind of technology devices. So anyway, some sort of pet healthcare companion animal group, water quality products for the pets. So let's go see. People spend a lot of money on their pets. Let's go check out the net income. Massive. They made 275 million net income. You know, that was real too. So they're easily making 2 to 300 million of net income every quarter. The growth rates have been really good the past 2 quarters. Yeah, that's real as well. That's impressive. It might be a little expensive. If you wanted to buy them for the first time, it does probably look a little expensive right here. But um Eli Lilly is down 11% today. Okay, yeah, from its peak, yeah, look at that. They've kind of been trending down the past couple of days in a row. Well, they've had a crazy amount of momentum before today. I still remember this stock at $600. Dang, I should have bought them. Eli Lilly is a great one. Hey, Daily Trade, what up, dude? How are things with us? I'm not sure what you mean there, but what's up, man? If there's no opinion or what up, going for my country when selecting resident addresses on Moomoo when creating an account. Does that mean I have no way creating an account? Yo, this might not be available in your country. Yeah, or this brokerage I'm on right now, this app is only available in like I'm not sure which country you're in, but if it might not be available in some weird country, unfortunately. Yeah. He says, my country has no option for address, so it might not be available there yet. Maybe I'll do a Google search. Is Moomoo available in your country? It might not be. AU, please. Is that? Let's pull up AU right here. AU. So here's Anglo Gold. So yeah, this one's probably following just the commodity of gold. Let's actually pull up the price of gold right next to it. So the price of gold is ticker symbol IAU or GLD. Actually, they've been outperforming gold by quite a bit. Look at that. So let's go look at their actual numbers right here. Yeah, so the sales are up 62% year over year. Sales are up 62. The net income's up 250. They really netted 815 million of net income. That's after they paid 180 mil of taxes. They really netted that. That's insane. So as long as the price of gold stays high, they could probably just keep on selling off gold. I think they let's see, engages in operation and exploration of gold mining projects through its subsidiaries. So it looks like they own a bunch of gold mines. Pretty cool. And now that the price of gold's at an all-time high, why not take some profits on them? So yeah. Here's kind of their website right here. All right. Need them to pull through on their earnings. Definitely going to be a big position. Hey, nice there, Nick. What stock could I get for $4? Well, that you should never. The actual price of the stock doesn't matter, because you can buy fractional shares, and unless you just don't like psychologically having one share, and I own a lot of fractional shares, and I buy fractional shares all the time. I'm a fan of that. Like sometimes like I'll go spend I'll buy a $5 meal deal at McDonald's, then I'll go buy $5 of a fractional share at McDonald's just for fun. So yeah, we got like 17.09 shares. You know, so buy a fractional share, just a company you love. So basically, you're asking me what stock should I buy? One you love, the S&P 500. You know, you can even buy a fractional share as little as $1 on like any of these platforms. Uh, yeah, hey, daily trade, dude, that's not cool. They're trying not to spam there. Yeah, hey, don't Plasma, I'll do that if you keep spamming. Can you do AMD? Yo, what up, Yumi? Oh, I'm in Finland. Yeah, I don't know if it's available in Finland, unfortunately. Let's do AMD. Yeah, dude, AMD is one that I do own, and I think they went up with NVIDIA because earlier today, the US allowed exports of like NVIDIA's H20 chips and some AMD chips to China again. So AMD is super pricey here. I just thought I bought it way lower than it is today. I think it's an easier double than like an Nvidia. Because if you look at the market cap of AMD, they're worth 350 billion. So for you to double your money, they have to be worth 700 billion. But if we go to Nvidia, for example, Nvidia is worth 4.48 or 4.5 trillion. Just a lot. It's hard for Nvidia to double that market cap and especially triple and stuff. So I just think it might be an easier double outside of Nvidia. And I kind of like owning the whole NVIDIA ecosystem, from CEG to FIX to Powell Industries to Supermicro Computer and Dell. So here's AMD right here. Let's see. Yeah. What's the forward PE again? 65 forward PE. That's actually a good, that's not crazy nuts, but yeah, they're making good net income every quarter. They have a great balance sheet, no net debt at all here. Investing in the future a bunch as well. Look at the FCF, which stands for free cash flow. It's been very nice growth here, up 290% year over year to basically record free cash flow. So there's a growthy name. Let's see. A good monopoly stock that is not ASML/TMC or APH. Monopoly stock. Monopoly, that'd be like a Visa and MasterCard. They have like a shared oligopoly. Google, you can call Google a monopoly for search engine. They won their case of not being a monopoly because they said OpenAI, ChatGPT has given them so much competition, but now Google Gemini is doing better than them. So, yeah, there you go. Visa, Google. Comfort Systems, this is a highly fragmented industry, but I wonder how MCOR is doing versus Comfort Systems. MCOR is a pretty interesting one as well. Does the same thing, or well, actually not the same thing as Comfort Systems because FIX does more offsite module HVACs and stuff. All right, one or two more here, then I gotta go. I think you should do portfolio ratings on live. Hey, yeah, that'd be fun if someone could I could look at their Blossom portfolio or something like that. I bought some Uber. Uber, we did a deep dive analysis on them earlier in the stream. Uber's really nice. The forward PE is a 27. I mean, that's fair for a company that prints money the way they do. Uber is a great software name to never sell. Honestly, Google's also is like a mini Uber with their Waymo. What do you use all the different brokerages for? Yeah, hey, each brokerage, it's just my psychological thing. There's no burden of having multiple brokerages. Like it's just an extra little filled out sheet of paper you get. So I have a different goal with each portfolio. This Robinhood one's called my dividend only portfolio. This is my risk on portfolio where I can just do whatever I want. But in this one, this is my buy and never sell portfolio where once you buy a stock in here, I never sell it. So that's kind of my different goals with each one there. Looking at MU and Amazon, Allison. Oh, yeah. Let me get to Allison Transmission right here. So, wow, they've actually done very well since 2019. What's the multiple? Wow, the PE is a 12. The forward PE is a 13. So, they did miss on their EPS this quarter. They missed on their revenue, missed on their net income, and on EBITDA. So, they missed on every metric by a good chunk there. So, actually, yeah, look at this. The sales are down 16%, and the net income fell by 31%. And that was real too. So the organic business isn't a decline right now, but the stock is like, there must have maybe been some sort of good news here because they've been just been momentuming up higher, probably because the valuation is just so cheap, 12, 11 PE, 1% dividend yield, very safe payout ratio. If the growth comes back, this looks like a great stock to own. You get a 1% yield and only a 12% payout ratio. So it's really interesting there. Hey, New York, good to see you, man. He says XPEV. Now, out of all the EV manufacturers, there's BYD. I might like BYD a little better. I like XPeng way a million times better than Neo, Lucid, and Rivian. XPeng's the best out of those picks, but for this reason right here, they're barely losing any money now. They've significantly narrowed their losses. If we zoom out, they used to lose 100 to 300 to 500 mil a quarter, but now they only lost 50 mil, 60 mil, 90 mil. Their losses are narrowing significantly. On top of the massive top line growth, sales are up at 98% year over year. I think they had record deliveries this quarter. I wonder if there's any news down here. Oh, Xpeng achieves record exports and 1 millionth vehicle milestone. Oh yeah, they're Neo or X, Xpeng exports 5,000 cars. So in other countries, they're seeing some nice growth. Where does their sales come from currently? Let's see. All of it comes from China right now, but I guess it's soon going to be in maybe Europe or I don't know. So yeah, they used to be the supplier for Ford and GM. Yeah, that's kind of what you heard about Ford. It's like Ford cars are like has parts from like 100 different companies and stuff, but Ford assembles it. And uh, they just bought Dana Off-Road Division. Oh, dang, you know a lot about them, Looney. That's real interesting. But anyway, guys, I hope you have a great rest of your day. I gotta go, but let me end this with a quick portfolio update. If you want to hit the follow button, we stream every day. We'll be live tomorrow. Might do one later tonight. I don't know. I'll see if I'm free. But yeah, the market closes in 20 minutes. We are down in our main, or actually, this isn't our main account anymore. Look, this one's worth 28,000. Our Moomoo account is now worth 29,000. It grew to that size. We're up almost 15K all time in here, but yeah, our Robinhood portfolio, every stock in here is down on the day, but every stock in here pays a dividend, and they're all also in the S&P 500. They all do a lot of share buybacks. Actually, we're having a nice little recovery. CEG is well, actually, I don't think the SPY is recovering yet. So hopefully, as the last 20 minutes of the day will rally up. Our Roth IRA just went green though. I think Cormedix is up 6.4. This is our Roth IRA. A Roth IRA is just a tax-free retirement account. So OP, the government only lets you deposit 7K a year. Yeah, this is our Moomoo account. Once we buy a stock in here, we never sell it. And then we have our Webull portfolio. So anyway, see you all very soon. Hope you have a great rest of your day. Watch out for people impersonating me. Just know I'll never follow you, DM you. I sell nothing. I have no course book, nothing like that. But feel free to hit the follow button and the like button. And thank you to everyone on the YouTube stream. Y'all are the best because I'm trying to build up my YouTube stream. See you, Plasma, Jay. No way y'all are still here. Looney's still here. Jay Shelton, Plasma, New York, Marco, Silent, anyone who's on the YouTube stream. Thank you very much.